Having challenges in the last 24 hours. Is commercial real estate the shadow you're concerned about?
Well, when interest rates go up, commercial real estate values and other real estate values typically go down. So we've seen that impact right now. I suspect there are going to be some dislocations in commercial real estate, but this has been going on for a while because ever since there was the tech bubble burst that we saw about a year or so ago, real estate has been challenged, and as interest rates have gone up, real estate has been challenged, and I think the real estate developers are sensitive to this. I don't see a widespread collapse in the real estate market at all. I think the real estate developers have learned their lessons from 10 years ago. They haven't made personal guarantees the way they used to, and I suspect that the industry will get through this.
David, appreciate your time this morning. We expected to have a different conversation, but things are moving fast.
Well, next time we'll talk about my interview with, I'm interviewing next week Jane Fraser, who is the CEO of Citibank, and I'll be doing that interview for Bloomberg and for others, so thank you.
Very cool, David. Thank you. David Rubenstein there of the Carlyle Group. And just a programming note for you, you can watch David's interview with the former Commerce Secretary and PSP Partners Chairman Penny Pritzker on the David Rubenstein Show. Peer-to-peer conversations tonight, 9 p.m. in New York on Bloomberg TV. From New York City, with all eyes on Credit Suisse, we're down about 20.6%. It's a break of 2, it's a break of 190, it's a break of 180, 178 on that stock right now.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The Pentagon says a Russian fighter jet collided with a U.S. surveillance drone in international airspace above the Black Sea, causing the American aircraft to crash. Russia's defense ministry denies the claim. The U.S. European Command says the warplane struck the propeller of the Reaper drone. The State Department is calling it, quote, a brazen violation of international law. About 500,000 British workers are striking today as unions stage a mass walkout, timed to disrupt Chancellor of the Exchequer Jeremy Hunt's annual budget. Teachers, junior doctors, civil servants, and the workers on the London Underground are expected to join picket lines with rallies and marches planned near Downing Street and the House of Parliament. Capital Subway is effectively shut down over a pension and working conditions dispute. Japanese Prime Minister Fumio Kishida will meet with the head of the country's largest labor union today to try to encourage employers to raise wages. The wage talks have been attracting extra attention since Kishida called on companies to boost pay as part of his new so-called new capitalism policy, asking for raises that exceed inflation, which is at a 4-decade high. In Pakistan, Imran Khan supporters formed a human shield around his house as police got ready to storm the compound to arrest the former premier for the second time. A police spokesperson says the arrest warrants are to ensure Khan will appear in court to face charges of failing to disclose assets related to the sale of state gifts. The former prime minister has been skipping court appearances, citing threats to his life. Global news powered by more than 2,700 journalists and analysts. I'm Lisa Mateo, and this is Bloomberg.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. You know, lots of testing, lots of thinking about what could go wrong, lots of research. You know, when I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of, like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
City.
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
He's there, the kind of upside.
really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm wondering whether you would be open to assisting further if there was another call for additional liquidity from Credit Suisse.
The answer is absolutely not, for many reasons, outside the simplest reason, which is regulatory and statutory. We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in, whether it be by our regulator or the European regulator or the Swiss regulator, and we're not inclined to get into a new regulatory regime.
The Saudi National Bank chairman speaking with the brilliant Youssef Gamal Al-Din of Bloomberg. Those words shaking this stock. Top shareholder of Credit Suisse, not inclined to invest or provide any more assistance. Credit Suisse down 20%. It was a break of 2 this morning, then a break of 190, then a break of 180, 179. We're down to 20%. Session low 168. There was a break of 170 in there too. It's been a long morning already. So Credit Suisse not doing well. That spills. It bleeds over elsewhere. Equity futures down by 1.7% on the S&P 500. Equity futures a whole lot softer. In the bond market, you'll see a move of 15 basis points on a 10-year. You go further inside to the 2-year, front end of the curve, and move at 22 basis points. Briefly, a break of 4 again on a 2-year. 4.02%. in America on a 2-year treasury. And Tom, just to have a look at Germany briefly, down 27 basis points there, 262. Next week is Chairman Powell. Tomorrow, it's President Lagarde.
Yeah, the global contagion here of Credit Suisse, there's no question. We saw that earlier this morning. Right now, stasis in the stock trading at a 179. The technicals is mostly a dearth of selling going on now. That's different than 2 hours ago. Just a touch of buying on Credit Suisse, but the sellers are clearly paused here to see for more information. Speaking of information and with an old world perspective, we are thrilled to have one of our good friends back. Nouriel Roubini is the CEO of Roubini Macro Associates, but far more than that, someone who brilliantly was out front of previous crises. We'll keep the introduction short this morning. Nouriel, good morning to you. How is this crisis different than '98? How is this crisis different than 2008?
Well, compared to 2008, right now, we don't have the credit risk yet. We're not in a recession, and the losses that occurred seem to be related to market risk. A number of financial institutions did not realize that with rising interest rates, the price of bonds would fall. And last year, U.S. banks alone have something like $620 billion of unrealized losses on their securities with a capital of about 2.2 trillion. So the average loss is about 28%, will reduce significantly their capital ratio, the Tier 1 ratio. And for some banks, actually, the numbers like Silicon Valley Bank, of course, the number was 100%. But there are still other regional banks where if they had to realize losses, there'll be 50% of their current capital.
Nouriel, I want to go back to your Italian economics, your public service to President Clinton, where you were expert on the regulatory framework. Switzerland is a devolved federal government with the cantons with great strength. What is your knowledge of Swiss regulators right now? How removed are they from the Credit Suisse crisis, or can they be active today to help their beleaguered bank?
Well, they can be active today even if they have a system that is delegated. However, the problem is that Credit Suisse, by some standards, might be too big to fail, but also too big to be saved. It's not clear that, unlike the United States, the federal system has enough resources to engineer a bailout. And what they need certainly is more capital, and the question is whether they're going to get that capital or not. Otherwise, bad things can happen.
Well, bad things are happening this morning. Nouriel, I'd love your take on this. There might be some people waking up this morning, looking at what's happening with Credit Suisse, perhaps based here in the United States, and thinking, what does this mean for me? Why is this important? Could you explain to those people, Nouriel, just how important Credit Suisse might be to the financial system?
Well, it's important because SVP was only about $150 billion of assets, while in the case of Credit Suisse, we're speaking about at least $700 billion. So anything will happen to Credit Suisse will be of systemic effect for not just the European financial system, but also for the global financial system. So if Silicon Valley Bank create ripple effects in global financial market, something bad happening to Credit Suisse will be an order of magnitude more severe, something more like a Lehman moment.
A lot of people are talking about the implications of this on monetary policy. And Torsten Slok earlier said when the facts change, his view changes from no landing to a hard landing. He sees perhaps the end of a rate hiking cycle, as does the market, including 100 basis points of cuts in the next year. Nouriel, do you agree with this assessment? Have the facts changed where suddenly rate hikes are out of the picture and you see that the inflation story will get solved by a crisis elsewhere?
I don't think so. I think that the dilemma for central bank has gotten even worse because the latest economic data for inflation in the Eurozone or the US suggests that inflation is still too high, is falling, but is not falling as fast as the Fed or ECB want it to be. So based on what's the economy doing right now, we need to hike and hike much more. The Fed should go at least closer to 6%. The ECB should bring the deeper rate to at least 4%. The problem right now, we're facing a situation of financial instability, and financial instability would suggest to stop hiking, maybe even cutting rates, maybe even resuming quantitative easing. And what the Fed has done is backdoor quantitative easing. But if you do that, you have a risk of the anchoring of inflation and inflation expectation. That trade-off existed even before. Raising rates would have led to stresses in financial market, like last year, where bond yields went much higher, credit spread widened. That stress is becoming more severe today because now we have systemic financial problems, but we are also in a situation inflation is staying way too high. And the idea that this financial stress is going to cause inflation to drop is not yet in the economic data. So there is a dilemma for central banks.
Although a lot of people are saying that they see credit conditions tightening. We heard earlier from Larry Fink of BlackRock saying that he sees a slow-rolling crisis that's going to move from the banking system to private credit, to private equity. How does your view kind of tie into this, a sort of inherent credit tightening that we see across a whole host of assets?
Certainly, there's going to be a tightening of financial conditions, at least in terms of credit spreads. Bond yields are falling, but on the short and long end, that's an easing of financial condition. That eventually might lead to an economic slowdown. But the reality is the inflation today is way too high, and it's going to remain too high because the forces that are leading to high inflation, like, for example, very tight labor market, are still with us. And therefore, that's going to be a cause of persistent inflation. And the idea that eventually tightening of financial conditions is going to cause a slowdown of the economy and a weakening of inflation is not yet in the data. So there is a real contradiction between achieving economic stability and lower inflation and maintaining financial stability today.
What a conflict. What a conflict. Nouriel, I've got 45 seconds left. I wanted to give you the opportunity to try and answer this. Banks found out that a risk was where they thought the safety was. Nouriel, where's the safety now?
Well, the safety is not in long-term treasuries. I've been writing for it for over a year. You know, if average inflation were to be, say, 5%, 10-year treasury eventually would have to be 7%. Today, they're around 3.5%. Last year, you lost 20% on your safe bonds, more than you lost on your S&P because yield went from 1 towards 3. If they go from 3.5 to 7 over the medium term, there'll be further bloodbath on $20 trillion of long-duration risk assets. The solution is going to be short-term treasury, tips, gold, precious metals, and other hedges against inflation. That's where you have to go. And investors only now are starting to realize it, that that's what you have to do.
It's going to be a conversation you and I have, the whole of this team, for a long time. Nouriel, thank you, sir. Nouriel Roubini there of Roubini Macro Associates, and Tom, of course, the author of Mega Threats.
Yeah, Mega Threats, and then there's a chapter where Roubini was typically 3 years out front of everybody else. I'm not going to bore people with my Davos story with Nouriel before the financial crisis. There's no time for that. But he talked about the easy money trap. And that's what Taleb was talking about when he said the gravity's returned to the system. And, you know, I'm going to be blunt, and it's not just us. It's the, you know, we got 45 people in the control room. And it's just, I'm sorry, John, it is critical how out front our bookers, our team has been on the gravity returning to the system this year in full force.
We've got a fantastic guest lined up for you next. Elisa Shallard of Morgan Stanley. That's coming up next. Equity futures down 1.75% on the S&P. Credit Suisse lower by 20% from New York. This is Bloomberg.
back to another special BNP Paribas Open update for Bloomberg TV and radio. From Tennis Channel, I'm Andrew Tyree. Coco Gauff celebrated her 19th birthday in the desert, and she gave herself an extra present Tuesday as she punched her ticket into the quarters. The American had just too much for Sweden's Rebecca Peterson, closing out the hard-fought victory 6-4 after 2 hours and 17 minutes on court. And don't forget, you can watch all the action from Indian Wells exclusively live on Tennis Channel. I'm Andrew Tyree.
Let me talk about Starbucks for a moment. You've been on the board for how long?
Wow, a long time, since 2006.
Okay, and when you got on the board, did you have to go to Starbucks every day and
I go to Starbucks a lot.
And
yes.
when you check in, do you have to wait in line like everybody else?
Yes, I wait in line like everyone else. That's an important part of the process, to see how everything's working, how long it takes, what's happening in the store. I take pictures of the cases. I do all sorts of things when I go in now.
So what's your favorite drink, can you say? Is that a state secret?
I make a joke about this. So I like my coffee black like me.
Okay. Now, Howard Schultz has been a mentor to you a bit. Is that correct? He's the founder of Starbucks.
Sure, for sure. Very important.
So what did he do that made Starbucks so successful? There are other coffee chains around the world, and it wasn't like he invented coffee chains. What did he actually do that made it the biggest in the world?
He really started off from the very beginning saying that he wanted to create a different kind of company, and that he had this point of view about leading through the lens of humanity. It sounds like it could be a cliche, but it's not at all. It is very much in the DNA of the company, how we look at things, how we do things. It's always through this point of view of people. And so at the end of the day, I think he put people first, not only in terms of the partners of the company, but also in terms of the customer. And at the end of the day, that is what has made the company so great.
News breaks. No one covers the world like Bloomberg.
This is the biggest issue right now facing Ukraine. Last year was all about weapons. This year to ammunition, as they are facing a potential this spring fresh offensive from Russia.
They are very hopeful that there is going to be a recovery. It's not as bullish as some people were hoping. Obviously, markets today very disappointed with the numbers.
This next president is really going to have to come in quite aggressively to deal with a lot of these economic issues that people are dealing with on a daily basis.
Bloomberg, your global business authority.
We had a long-standing presence here in Houston for the past, I would say, 20-some years, since the Compact merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist.
To the world of business. Balance of Power is now live from Bloomberg's Washington headquarters at a new time. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis from and about politics' biggest power players. Balance of Power, now weekdays at 5 p.m. Eastern, only on Bloomberg, your global business authority.
For the Fed to actually pause or cut, it's going to send a pretty negative signal.
If the Fed does not hike next week, there will be real questions about whether the Fed is also committed to price stability.
Inflation still is a concern, but they have to address the current environment.
The Fed's trying to tighten things up and realizing that it's not that easy.
This stress in the system now tightens financial conditions and is a warning about the lagged effects of monetary policy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Bramowitz, Tom Keene on radio and television. Another day of financial crisis, this time worldwide. It is simple as this. It is about Zurich and Credit Suisse. It is about Cabot Square in London and Credit Suisse. And dare I say, of a Credit Suisse First Boston attempting to be built in New York. John, it's global.
It's global in a major way, and it starts with Credit Suisse this morning at least. The stock is down by almost 23%, just off session lows, just off record lows, 173, 172, the record low 168 a little bit earlier this morning. The news, it comes from the top shareholder, the Saudi National Bank chairman, speaking to Bloomberg and saying, will you provide more assistance? Absolutely not, for many reasons outside the simplest reason, which is regulatory and statutory. We understand the regulatory issues of crossing that 10% threshold as a shareholder. But Tom, again, I've said it repeatedly, we all have through this morning, to say that out loud when the stock is down as much as it is. And now it's down even more.
I'm going to interrupt for radio rather, in technical analysis. The stock is well contained and trending down, a straight line pause at 177. And moments ago, when John Farrow began speaking, the stock went lower, 170, 1.70, perhaps to test 1.68. John, I don't understand what U.S. regulators of Credit Suisse in New York and what FSA and the like do in London at Cabot Square. What do they do? Dial 1-800 Swiss National Bank and say, let's go?
No idea. And what are they meant to do? What's anyone meant to do at this point? Is there a solution? Do they need a solution? I've got no idea. I won't speak for the regulator. It's not the time. Then we've got to have some cool heads here looking at this name, which is really taking a major hit in today's session. The monetary policy question is fascinating. President Lagarde's got to go tomorrow. She pre-committed to 50, basically. Will she go with 50? Next week is Chairman Powell. I keep saying this, in a world where a bank seemingly can just break, snap, in 24 hours. A week is a long time for this chairman. A week ago today, we opened this program and we were talking about, do we go 50? How low is the bar for that? I think the bar is monster high to go 50 next week, Tom, even with the data.
Maybe we're going to get a test here in a moment, 1.68 right now. We'll get a new low here in a bit. Lisa, what have you learned this morning? What have you learned in the last hour?
That the bank contagion, or at least the fear of it, is anything but gone. People had hoped for stability. That is off the table. We are now pricing in 100 basis points of rate cuts in the next 12 months, even sooner than that. How much do we get a response from central banks? And is the tightening, I mean, to Nouriel Roubini's point earlier, this question of we still have an inflation problem, otherwise we'd be talking about CPI, PPI coming out in half an hour, retail sales coming out in a half an hour, labor market that's running hot. How do you deal with the inflation problem at a time where something seems to be breaking, and people are very concerned about that?
Let's break to the data check right now, John. It's sporting with the VIX. He had four big figures earlier, 27.47.
So we're sitting on the lows of Credit Suisse's stock. It's down 25%. It's back down to 168 in the last 5 minutes or so. If you take a look at what's happening in Europe, SocGen is down 13%. BNP Paribas is down 11 or 12%. And this won't be lost on many of you listening, watching. A week ago, we were talking about this being the trade of the year so far. People wanted to own this story. Europe, the economy doing better. The ECB seemingly is going to keep on hiking. And then all of a sudden, it looks like things are starting to break. It started last week. It bleeds through to this week. SocGen, Tom, down more than 12%. BNP down more than 11. Commerzbank down by almost 10.
And then we saw the Standard & Poor's 500 futures, negative 73 now, John, come down as well. I really think we need, particularly for America, waking up here, and to get to our good guest here in a moment, John, we've got to say this has not only a global banking tinge, but also, granted off IEA and OECD, we're seeing a global GDP slowdown with a 69 print for a moment on West Texas Intermediate.
Tom, we're seeing headlines that you don't typically see, and this is from the Deutsche Bank CEO, Christian Sewing. The deposits are diversified at Deutsche Bank, they're sticky. That's the kind of moment we're in.
If you have to say it.
I agree that that's the kind of moment we're in, that they've got to come out and say these things out loud, that we don't have a problem here. Deposits are diversified, they're sticky. Ultimately, that's a nod towards this idea that we're not SVB. Those deposits were not diversified, they were not sticky.
My Bloomberg, there's a silence here to the Credit Suisse trading. We're going to get reporting on that in a moment. We had a number of halts through the morning. We have to be careful on that. 1.6805 on that. Joining us now with wonderful perspective, as we had David Rubenstein earlier and Dr. Rubini, Lisa Shallot joins, the Chief Investment Officer for Morgan Stanley Wealth Management. It would be inappropriate for her to speak for Mr. Gorman and the executives of Morgan Stanley activity in the last 4 hours. Lisa, I must ask, because you are with Wealth Management, how do you contain the phone calls? How do you contain deposit inflows of a certain flight to quality?
Look, I think the most important thing that we're talking to clients about right now is getting folks to understand the difference between what happened in the great financial crisis in 2007 and 2008 and what's happening now. In 2007, 2008, we had a massive credit problem. There was a quality of credit default risk set of issues. This go round, the assets that need to be revalued are not, mortgages and real estate. They are in many cases, sovereign bonds of governments. And those are very different things. And so, for the handful of banks that have found themselves in a situation where their funding model on the asset side of their balance sheet needs to be or should have been more aggressively marked and risk managed, that's really the issue. What is fascinating here is the role of psychology, right? When you get bank runs, when you get depositors starting to worry about the integrity of their deposits, that is a very different dynamic. And I could suggest to you that there is a scenario where, the situation at Silicon National Bank did not have to happen if all of the folks who were the major deposit holders, who were major holders of loans there, who were major account holders, didn't suddenly en masse decide not only to all withdraw at the same time, but to literally put that on social media as an action. That we are living in very, very different times. Yep. And we have to kind of understand how important it is, the role that regulators play, the role that, capital reserves and capital buffers play, and how important, having the integrity of those stress tests is. And so we talk about, there are the haves and the less haves. And the folks who've really, been put through those paces and those stress tests, and the folks who have been allowed because of their size or their organizational structure to perhaps experience, quote unquote, a lighter touch of that regulatory oversight.
Lisa, there is a back of the envelope conversation happening right now. Maybe it's too simplistic, but it goes a little something like this. After what we saw develop in the United States last week, the focus quickly went back on duration risk, the mismanagement of interest rate exposure, interest rate risk. And Lisa, because of that, I think given the losses you've seen in treasuries over the last 12 months, people just instantly said, well, wait a minute, what about Europe and what we've seen develop there in the last year, Lisa? Can you speak to that?
Yeah, look, I think, this is a huge wake-up call. It's a wake-up call, however, that shouldn't be a brand new thing. Understanding if you're going to own financials, if you're going to be an investor in that sector, understanding the funding model, understanding, how a bank is generating, cash flows to pay depositors and to attract depositors is a key part of your fundamental analysis. And so there's an element of this, where this is less about immediate contagion. Again, remember in the great financial crisis, there was a lot of this that was about, cross counterparty credit risk. That's not what this is about. These are about individual banks who potentially have not, were overly aggressive in funding themselves out the curve during an episode of central bank tightening. And, that is one could say, somewhat, economics 101. So I think that there may be some other mistakes out there Yes, I do. But I do think that the systemic interconnection of them is very different than in 2008, 2007, 2008.
Just quickly, Lisa, given that perhaps you don't see the systemic relevance in the same kind of way as 2008, do you still think that it's important for the central banks to hike rates to combat inflation, to make sure that inflation doesn't get out of hand in the longer term? Or do you think that there is enough breaking that it's time to pause?
Unfortunately, I have worried about central banks being late to the party on this inflation challenge. I think that if central bank credibility has a chance of being preserved, I think that the Fed especially, and then secondarily the ECB, needs to continue on their tightening campaign. They need to make clear, as they have, what their intentions are, that their goal is to fight inflation, to defend the integrity of these fiat currencies. And not doing so has much longer term structural damage to the economy in terms of inflation risk premiums, overall policy term premiums, and turns into higher for longer rates over long periods of time. So, look, for the Fed, their out is that the regulatory and examinatory part of the Fed is separate from the central bank operations, open market operations. They've got to kind of stay the course, in my humble opinion. And I think to do anything else, at this juncture at least, would really be a misstep.
Lisa, thanks for being with us. Lisa Shallett of Morgan Stanley Wealth Management has been cautious all year and has not chased the rally that developed at all. Equity futures softer, Credit Suisse down 24%.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The International Energy Agency says global oil markets are contending with a surplus as Russian production defies predictions of a slump and fuel demand slowly picks up. Oil stockpiles have climbed to the highest in 18 months, with Russia increasing output last month despite warnings it would buckle under international sanctions. The IEA has boosted its Russian output estimate by 300,000 barrels a day. Credit Suisse's chief executive officer says the bank had seen inflows of client funds on Monday after markets and U.S. banks were pummeled by the collapse of Silicon Valley Bank.
So far, it's pretty calm. We even saw material good inflows yesterday still. Also, I had a client meeting which was very positive on that one. So far it's calm, but I think it's early days to look at that.
Ulrich Korner spoke exclusively to Bloomberg. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Names in business are on Bloomberg.
Do you foresee a future where JP Morgan could potentially re-enter the Russian market?
One day, maybe, but it's very possible that won't happen in our lifetime.
Nobody covers business like Bloomberg. our studios in New York and San Francisco, our new hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech at a new time, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I'm wondering whether you would be open to assisting further if there was another call for additional liquidity from Credit Suisse.
The answer is absolutely not, for many reasons, outside the simplest reason, which is regulatory and statutory. We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in, whether it be by our regulator or the European regulator or the Swiss regulator, and we're not inclined to get into a new regulatory regime.
I wonder if we get a clarification on those remarks before the day is out. That was the Saudi National Bank chairman speaking with Bloomberg's Youssef Gamal Al-Din. Those words rocking this stock. Not exactly a ringing endorsement. The first couple of words of that sentence, especially. Looking at this stock move, we're down 25%. We've got a new record low, Tom. 167 print, briefly, back to about 168 at the moment.
Right.
And I think there's a few ways to look at this, and we've talked about it all morning. One, you can say, you're stating the obvious here. They don't want to go above 10%. There's a regulatory issue once you do. I get all that, but to say it out loud, one, and two, to say there were other reasons as well.
I would suggest,
and three, to start with the response with absolutely not.
Well,
it's
this
not
is
helpful.
But this
not
is what
helpful.
Let's go to military. This is what Stavridis would say. It's the unexpected. And, you know, that's the worry here. And this was unexpected. Youssef's interview is made global news. Every single entity is watching it as the market reacts. And the market deteriorated in the last 50 minutes. John, the technical analysis here is simple. On Credit Suisse, this is an exceptionally elegant chart and well-behaved. The sellers, there's a dearth of selling right now, not like we saw at 6 and 7 a.m., but here at 8:17 a.m., I'm going to suggest we're seeing a renewed point where the buyers pull back, and that's how you go to a 1.67.
So just to add two more things if I can,
1.66 moments ago.
Yeah, it's a new record low. One, certainly the issues that this bank faces right now have nothing to do with Saudi National Bank or the chairman. This has been developing for
well
a
said.
long
Yeah, we
time.
need to
So
say that. Yes.
Let's put that out there. Number one, if you've just started to follow this story, we've been following this for the best part of 18 months now, and the issues with this bank go back, I would say, a decade. And they've tried to help provide assistance by becoming the top shareholder in Saudi, in Credit Suisse rather, at the Saudi National Bank. But I'll say this also, days like today, moments like the moments we're in right now, Lisa, you just have to be so careful with your words. The language you use, the way you talk about whatever's happening, because things like this can happen quickly.
It's an emotional response, and you don't want to fuel it inappropriately, because right now we're talking about one shareholder talking about additional assistance. It's theoretical, yes. That said, when you take a step back, people are worried about the next shoe to drop. And I go back to what Larry Fink over at BlackRock said. He is concerned about that cascade effect as we realize what higher rates exposes, the vulnerabilities that it just makes that much more painful.
And we heard from David Rubenstein earlier of Carlyle, whose Carlyle Capital was challenged in 2008 to be polite about it. And Mr. Rubenstein said Switzerland is different. Again, our Jean-Patrick Barnett, who's led our coverage in Frankfurt, Germany, with his European banking experience as well. Where in God's name are the regulators, John Patrick? I mean, I guess our reporting, our team's reporting, but with all of your bank experience before journalism, in America, they'd be full front right now. Where are they?
Well, I mean, European regulators are not known for being the first out of the door when you have any kind of crisis. They're usually rather reactive than being at the forefront here. But let me say this, because like there were some critical voices out there saying people are too harsh on Credit Suisse and there is no issue on liquidity. Let's put that all aside. Let's say like there is all safe and sound in the whole banking system around the world. Liquidity is good. Nobody's going bankrupt, right? let's just face the facts, and that's why Credit Suisse is being hammered so much this morning, and that's why the regulator probably is also going to struggle to help, is the bank simply has an earnings issue. And everything that is happening now with a potential tightening of credit conditions, a potential recession, a potential reduction in interest rates again, this will all eat into earnings. And that's what shares are pricing, and that's why the shares are getting hammered. If you then get, of course, a big shareholder, and I guess he was just like speaking his mind there, not providing immediate backup, then you could create further issues. Because, like, let's say the other banks, why the other banks not down that much? Because they probably have still the opportunity, if if push comes to shove, to say like, oh well, let's go to the market. We are in a solid state. We have a working business model. We have good earnings that will recover when recession is over. Let's just pull in some new fresh capital and off we go. Credit Suisse will have a very hard time to do that, should they need to do it for whatever reason. And that's what the market is also pricing. So it's not about to say that Credit Suisse has a liquidity issue or whatever. It's just the facts. Earnings are going to suffer, and you will have a hard time to provide new capital if you need to. And that's why investors are so careful.
Jan Patrick, on Bloomberg TV, there is a promo for this show. And I'll summarize it as follows. I say something like, what does it mean when the White House says they're looking at markets? And Tom laughs and says,
I can't remember what I said.
I got a Bloomberg or something like that. Anyway, we all hate that promo. It plays every 10 minutes.
They have a Bloomberg at SMB.
Something like that. And we all laugh about it. We hate the promo. But ultimately, Jan Patrick, it's kind of relevant this morning. Because whenever you hear from officials and they say things like, we're watching it carefully, or wherever you hear from investors that say, we have faith in management's ability to turn this around, it always feels pretty hollow. But Jan Patrick, this morning, we haven't got any of that. And you've got the SNB, the Swiss National Bank, who comes out and says something like they declined to comment on Credit Suisse. Are we saying this story this morning could be different if the Swiss National Bank came out and said, we're watching this carefully? And if the Saudi National Bank chairman came out and said, we have full faith in the leadership at Credit Suisse? Are you saying that makes a difference?
Absolutely not, in my view. We have a totally different situation here, and I have all understanding for the regulator not making a comment at this point, because the thing is, like, I believe whatever they would say, unless it's like some really drastic measure, and we are far off that point here, the market wouldn't really care. What we're doing right here, like, is within banking stocks and within the global equity market is like, we are doing a repositioning, in my view, pretty hard and pretty sudden. Everybody felt so comfortable in this. Inflation is gradually coming down. We are all good here. Soft landing. Everything is fine. That was priced for the last 3 to 4 months in equity markets. And there were some good reasons to do so. And this whole scenario is now out of the window. And now you have to reposition. And of course, the banking stocks are at the forefront. So that's why people are selling them. And then again, in this forefront, in this first line of defense where the stuff is hitting, you're selling the weakest cheaps twice as much. And sorry to say so, no offense to Credit Suisse, but among the banking crowd, it is the weakest stock at this moment for everything I said before, earnings impact, backup from potential investors. So it all makes sense. And the regulator and politicians in general, they can do very little to change that, right? Because the market forces on the economy will just play out at this point. And when it becomes very bad, then we will see if they have to do something to give us a little bit of a lifeline here.
Jan Patrick, just quickly here, how thick is the line between a profitability issue and a liquidity issue?
Well, it is thick, but I would say, like, it's not that thick that we have to immediately talk about like an liquidity problem for Credit Suisse. European banks have lots of access to liquidity. Credit Suisse has tons of deposits, and I'm not seeing that the classic Credit Suisse client is running away immediately. Still, it can be an issue down the road, and of course, every bank is now making sure that their shop is in order. And Credit Suisse probably has, again, here a harder time than other European banks bringing across that message to its clients.
It's a tough time, not just for the clients, but for the people working there too. Jan Patrick Barnett, thank you. On the latest from Bloomberg, Credit Suisse down 26%. New low, Tom, 164. We've said it repeatedly.
Well,
we all know people who work at Credit Suisse, immensely talented individuals. Imagine trying to work through this morning and engage with clients.
Well,
do work, looking at this move.
That's the heart of the matter. In New York, down at Madison Avenue, at Cabot Square in London, etc. How do you engage a conversation? Right now, 168, make it maybe 169, bouncing off a 164 low. Sellers are really on strike here. It's just a dearth of buying is what I see. I was using my vast German knowledge, John. Folge dem Geld, which is follow the money. And, you know, John Patrick was talking there about profitability. I would be talking about flows right now. I think immediate flows. And it's not just this bank. There's many other banks where that's the case.
I think that's the question. You know, when does this become not just a profitability issue, but something that is more significant? And I think that that's what you're seeing, the tension in shares of other European and U.S. banks.
Conversation continues in the next hour on Bloomberg TV. Julian Emanuel of Evercore, Emily Rowland of John Hancock Investment Management, Bob Michael at JP Morgan. Looking forward to that conversation in the next hour on Bloomberg TV. Futures right now on the S&P down 1.75%.
Typically, between the time you start and they get out in the farmers' fields, is about 8 years. Now we have a pipeline of innovations. You know, we've been funding the CG system for 20 years now. It's funded at about $1 billion a year. If people care at all about adaptation, that thing will be funded at $2 billion a year. I mean, there won't be anything close to the impact of climate-related seeds, climate-related maize, rice, wheat, sorghum, millet. And thank goodness, because of human genetics, we know how to do the editing. Thank goodness, because of AI, we know how to find the alleles. Because of drones, we can measure stuff in the field. So there's huge advance in terms of how the whole seed ecosystem moves at full speed.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We welcome you across this nation on radio, on television, and worldwide for what has become a global bank crisis. Credit Suisse challenged over the last number of days. Lisa Abramowitz, moments ago, we have a 159 print on Credit Suisse. I'm going to say technically, Lisa Abramowitz, it is well contained.
Well, and this is really the question. What is going to not only trigger the perhaps stability, but then also a revival after its top shareholder said he was ruling out further aid for this bank?
Well contained in our non-economics this morning is the patience of Michael McKee, in charge of international economics amid bank crisis, and he has retail sales for us. Michael, what do you see?
We've got PPI and retail sales. Let's start with retail sales. The consumer stopped spending in February, it appears. Retail sales headline number down 0.4. Ex-autos is down 0.1. And if you take the control group, there is some better news because that was up 0.5%. The expectation was for a fall of 0.3. Last month, the number for the control group was revised higher significantly to 2.3% from 1.7%. All of the numbers for last month revised higher. The headline retail sales was up 3.2%. The original report was 3%. Right. So generally with retail sales, you tend to average out over a couple of months, and it does show that Americans were still spending. They did pull back in some areas. PPI down 0.1%. It was forecast to go up 0.3, and it rose 0.7 in January. So there's some good news. The core rate is flat after a 0.5% gain last month and a 0.4 gain forecast. Right. You take out food, energy, and trade. Trade is not international trade. This is retailers and wholesalers, and it's their profit margins. That's up 0.2%, down from 0.6, but it does show, so it shows some fall there. On a year-over-year basis, 4.6% for the headline, 4.4% for the core.
Right, we're going to juggle this.
Tom, I got to throw this in there,
please,
because this may move the markets. Empire Manufacturing.
Yeah, I saw that.
Down 24.6. is the number. It was negative 5.8. Now it's negative 24.6. So real dry up there in the Empire Manufacturing numbers. New orders plunged down to negative 21.
We're going to do this differently this time because we've got a number of moving stories here and an exceptionally esteemed guest to join us in seconds here. Mike, I want to move away from this economic data to your interpretation and reading in the last 24 hours of how this Fed will respond to your economic data and our financial crisis. What would you guess they will do?
Well, I don't think the data today makes any difference to the Fed. The Empire is a sort of tertiary index, and retail sales show Americans are still hanging in there, but maybe spending a little less, which they'd like to see some demand come down. And PPI isn't going to change anybody's minds because it's come down. So therefore, that puts 25.
Mike, you and I look at retail. We look at Credit Suisse. Bramo looks at the 2-year.
Yeah, that's what we all should be looking at, because what you're seeing is a complete breakdown, down below 4%, 3.88%, as basically this is a market that has looked at PPI, inflation in the factories coming down much more than expected, retail sales diminishing as expected, and then a weak Empire Manufacturing print. We are looking at a market that's pricing out any further rate hikes and pricing in 100 basis points or more of rate cuts.
But you're a tennis fan, right? I know you like tennis, and this is like going back and forth with the bond trading. I mean, bond traders got to be going crazy. Their accountants are happy because, of course, volatility is good for profits. But it's hard to get a read on what's going on with the economy when you're just looking at yields right now, because they're being pushed around so much by all kinds of news. So where will they be a week from today?
The yield on the published dividend of Credit Suisse continues to rise as the price declines 1.6. Well, I think we maybe even have, I'll stop trading. I got to be very careful here in Credit Suisse. The low is 1.5975 quickly.
Well, to that point, if you take a look at German 2-year yields, dropping like a stone as well, 2.54%. Again, what does this mean? Is this economic data enough to write off further rate hikes, or is this a concern about Credit Suisse? Is this a concern about the financial markets? Something breaking at a time of potential real fragility.
It's a bigger concern for the ECB because they meet tomorrow. The Fed has a week.
ECB's tomorrow, and we need some experience. Lisa, it's interesting that Michael McKee is here on, what is it, Mike, 15 years back to Bear Stearns, 15 years yesterday?
15 years yesterday, yes.
That's maybe the most difficult thing here is I would have guessed 7 or 8 years. I got that wrong. And also joining us, someone who is steal time here with Mizuho over those many years. Stephen Richetto joins us, Chief U.S. Economist at Mizuho Americas in 2008 and in 2023. Steve, I'm going to cut to the chase with West Texas Intermediate giving us a 69 a bit ago. Lisa mentions the 2-year yield as well. Forget about curve inversion in recession calls. Do the parts of the American economy deteriorate given bank crisis?
Well, I think in this day and age, there's less dependence on bank markets than there are on credit markets. That's number one. Number two, there's ample liquidity in the system. We are in a free reserve system as opposed to a borrowed reserve system. Three, the Federal Reserve, the FDIC, and the Treasury, probably in the order of FDIC, Treasury, and the Federal Reserve, took very aggressive response to the Silicon Valley situation, the Signature Bank situation. So I think when you roll it all together, there is going to be less of a real macro impact to this than there is a financial market impact. All that being what we say, I mean, you have to understand we had a forecast of a second half recession. We're likely now to have an increased probability of that as a result of the developments that we're seeing. And as a precautionary environment, I would assume the Federal Reserve would probably do something like hike rates in March and then go into a pause, see where the dust settles, and let the markets go from there and give it some time, probably the 3 to 6 month period of time before they then change policy again.
So let's link the financial markets to the real economy, because in the real economy, we are seeing disinflation, at least when it comes to PPI. We are seeing a bit of cooling, and yet other aspects of the economy seem to not be what we got yesterday. So what's the real economy doing, and how quickly will it respond to what we're seeing in financial markets?
Well, again, you have to understand, if this is not a systemic credit crunch, it is not a massive decline in the underlying macroeconomic environment. It's a shallow type recessionary environment. So it takes time to bring all these things to coalesce, to bring down the rate of inflation and the rate of growth enough to rebalance the labor market. And it's an imbalanced labor market that is really the key here and continues to be the underlying driver of the underlying economic activity. If people aren't getting fired, if people are comfortable with their jobs, they're comfortable willing to quit their jobs and move on, these are the people who are going to continue to spend money. And spending money is what drives the economy.
I go back to what Nouriel Roubini was talking about. There is this dual mandate for the Federal Reserve. Financial stability is one of them, or many mandates. Employment, full employment is another, and then they also have to fight inflation, a very uncomfortable mix right now. I'm wondering, from your vantage point, which should take precedence at their meeting next week?
Well, I think that's a good question. I think what they've decided to do, and the chairman indicated this in his mid-year monetary policy report to Congress, or I should say his February monetary report to Congress, he made it quite clear the Fed's trying to separate the two roles. And I think this comes through in terms of people misreading this whole idea of the new lending facility as a quantitative easing. It's not. Yes, it increases the asset side of the Fed's balance sheet to the extent that it's taken down, but it doesn't change the portfolio of the Federal Reserve. And they're looking at trying to separate the two concepts. It's regulatory approach. It's regulatory approach to policy versus its policy with regard to inflation in the labor market, and that's a tough balance for them. But I think they're pulling it off nicely. And I think the term lending facility that they instituted should become a permanent facility, just like RRP did.
I need to stop and say that you and your colleague Dominic Constam absolutely nailed the super restrictive nature of the moment 6 or 8 weeks ago. You were lonely on that, and I think you did a great job. Part of that super restriction is it redounds to commercial real estate. What do you suggest the shadows of commercial real estate will mean, obviously, for economic growth, but also for our general financial well-being?
You know, when you're looking at the different areas that lead to underlying economic activity, tech space is clearly in a setback mode. Financial sector is clearly in a setback mode. Commercial real estate has been an ongoing train wreck for quite some time, and it's a train wreck.
Could you speak more clearly there? Do you want to? Train wreck is CFA level 4.
It's been a fairly slow train wreck. To the extent that it accelerates, you got to remember the banks that are involved in this and the people who are involved in this on the asset side and the investing side all have a vested interest in restructuring these deals in order to make them less of an importance in any one in particular quarter. Doesn't mean it doesn't have an impact in terms of the growth. It adds to the story and helps lead you to an environment where you have a tight labor market driving consumer spending, but you have all these other factors pulling back, which is why you probably get to the shallow recession forecast rather than the hard recession forecast that you normally follows if you have a systemic credit issue.
We heard from BlackRock's Larry Fink. He put out a letter, and he was talking about a concern about a slow-rolling crisis that unfolds, that first hits SVB, Silicon Valley Bank, and then regional banks, and then moves to the private markets that you were just talking about, the train wreck and commercial real estate, as you put it. I'm wondering, at what point does it become the most important for the economy, for slowing inflation, for losing jobs, for all of these metrics that people have been looking for as sort of a side effect, a negative one, a very negative one, of this tightening?
You know, if you wind up in a situation where the quote-unquote shadow bank was to be perceived to being at risk, then I think you could be in that environment. The problem you have to understand is this shadow banking industry has built up an enormous amount of reserves. They have been fearful of this. A lot of them come out of the legacy of GECC. They saw what happened there. They understand if you don't have the right reserves in the system. Now, again, fear can overwhelm the financials, and we've seen that. Right now, we aren't in that position, so therefore, it's a little hard to speculate whether we will go that route, especially given the fact that they've so successfully, I think, ring-fenced the banking industry. You know, this term lending facility, as I said, I think should become permanent, and the reason why is because going to the discount window has become so terribly concerning for any management, they won't use it.
Right. I mean, that's all this is. I want to talk to Steve forever. Can we make this happen? 12 seconds. You're right. It's a new discount window.
Correct. And it's a discount window that gives you an opportunity to restructure the bank because it's a one-year term.
Okay. You got to stop talking. Markets are going down. Risciuto's driving the market lower is what we see here. Stephen Risciuto, Mizuho Americas. Lisa, help me here. The 2-year yield nailed well under 4%, 3.92%. Lisa, look at American oil this morning.
Yeah, what you're seeing is at first it was a response to potentially the IEA report coming out that Russia was pumping a lot more oil than previously expected. Now, this is a bigger concern about the potential for some global slowdown. 69.86 on crude on WTI.
We have a breakdown in the equity markets called a 2% move. Standard & Poor's futures 77. John from Coventry emails in, says, quote, the Dow negative 633 on the Dow, and the VIX out again, 4 big figures, 28.08. Credit Suisse right now, a new low, 1.58. Good morning.
Keeping you up to date with the news from around the world with the first word, I'm Lisa Mateo. Syrian President Bashar al-Assad is meeting with Russian counterpart Vladimir Putin in Moscow today as the Kremlin pushes for a Syria-Turkey reconciliation. Russia will also host 4-way talks involving Turkey, Syria, and Iran. And the potential deal opposed by the U.S. comes after China brokered a diplomatic detente between Iran and Saudi Arabia, demonstrating its newfound weight in the region. China reports a rebound in consumer spending, industrial output, and investment this year. The National Bureau of Statistics says retail sales rose 3.5% in January and February compared to the same period last year. Industrial output rose 2.4%. However, the unemployment rate increased, pointing to a weakness in domestic demand. About 500,000 British workers are striking today as unions stage a mass walkout, timed to disrupt Chancellor of the Exchequer Jeremy Hunt's annual budget. Teachers, junior doctors, civil servants, and workers on the London Underground are expected to join picket lines with rallies and marches planned near Downing Street and the Houses of Parliament. The capital's subway is effectively shut down over a pension and working conditions dispute. And Apple is delaying bonuses for some corporate divisions and expanding a cost-cutting effort. Bloomberg has learned it will reduce the frequency of bonuses for a portion of Apple's corporate workers. And separately, the company is limiting hiring and leaving additional positions open when employees leave. Managers are also reportedly checking office attendance and curbing travel. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
you're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
multi-trillion-dollar industry. There's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Wondering whether you would be open to assisting further if there was another call for additional liquidity from Credit Suisse.
The answer is absolutely not, for many reasons, outside the simplest reason, which is regulatory and statutory. We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in, whether it be by our regulator or the European regulator or the Swiss regulator, and we're not inclined to get into a new regulatory regime.
An interview heard around the Credit Suisse world. Youssef Gamal Eldin of Bloomberg shaking bank foundations this morning with the comments of Saudi National Bank Chairman here on their commitment near 10% to Credit Suisse. I won't review the stock over the last 2 hours, but Lisa Bramwitz and I, with our good guests coming up here, will continue to monitor a stock that can't find a bid. Moments ago, Lisa, 1.573, so distant from where you think American regulators would step in.
And when you take a look at the credit side, you could see that the yields now on their perpetual bonds are 13%, almost 14%. That's the implied yield based on where the price is going. It's distress level. How much more do we see as people try to figure out what's going to be left for the investors if there is a profitability at the very least kind of problem?
The global ramifications, folks. Amy, help me here as you can with the charts on radio. I'll describe it. Futures negative 82 on SPX, Dow futures negative 656. NASDAQ is behind, less of a decline, negative 1.7%. And we're approaching 5 big figures on the VIX, getting back near 30, 28.33. With bank ramifications, we will go to Gina Martin-Adams in a moment. But first of all, on the charm offensive, the charm offensive of Swiss CEOs of Credit Suisse, Sonali Basak, our chief financial crisis correspondent, steps in this morning. There is a geography from Cabot Square in London to New York, down at the bottom of Madison Avenue, which is the heritage of Credit Suisse. How fractured are they this morning?
Listen, the interesting thing here is that Credit Suisse has been fractured for a very, very long time. So the interesting thing here is the fact that it's been bleeding for so long is actually what makes it, Tom, less jarring to see moves like today. But the systemic risk question that is underpinning the Credit Suisse question, classic risk question here. What is the floor? When you heard the comments from the Saudi National Bank here, it's a regulatory one. It's a technical question here. It's not a crisis of confidence here, but it is a signal that they cannot put more money into this bank at this time.
And Lisa, to me, what's so upsetting here is how do you run a bank under $2 a share?
How do
I
you
mean,
get out of
just simple as that.
How do you get out of this spiral? How do you get confidence if you're saying wait 3 years? They don't have necessarily 3 years, and they're not going to report until next month. I'm looking at the shares of big U.S. banks, which are trading lower in sympathy, and I wonder the fissure, sort of the line, and we were talking about this with Jan Patrick, between something that is a profitability crisis and something that is more of a liquidity issue. At what point are people concerned in the conversations you've had about something that's more than a profitability issue?
Coming into last year, we had a lot of bank executives across the globe, frankly, including right here in New York City, that were worried, very worried about the systemic risk tied to Credit Suisse. In more recent days, that risk has really gone down. If you think about what happened with Silicon Valley Bank, this was not a globally systemic financial institution. If you're Credit Suisse, you have the full faith and backing of the Swiss government. I think that's the point that
Completely unfair question to you, but it's unfair Wednesday, so go with it. How do you form Credit Suisse First Boston amid that environment? Would you suggest to me the lunch at one of Daniel Boulud's restaurants where you're going to try to recruit somebody over to drive forward on CSFB, the new bank they're trying to build? I don't get it.
There are a lot of questions around the plan here, and you all said the CEO of Credit Suisse just days ago tell you that it won't be before 2025, really before you see any form of IPO. So if you're bringing on bankers and you want that equity, there's a lot of questions about what that equity will be worth. Tom knows this more than everybody. So recruiting people on, creating a plan. They have not brought on more large anchor investors yet, but I will say we know how Wall Street works. The more the price drops, the more that investors get interested in coming in. I think the role of private capital, you've been talking about it, is very interesting, both in the SVB situation as well as Credit Suisse. The swirling of Apollo.
All right, come on, I got to go here, folks. You know, it's just Chanel. There's only 42 people watching. Could an American bank come in and pick up Credit Suisse for next to nothing this morning?
Can I tell you, in the 10 years I've covered this, that has always been the worry in Switzerland, that there would be an American bank that would want to expand abroad and buy a big wealth manager. Now, there are too many worries, Tom, about the risks inside of Credit Suisse. They are worried about everything from risk controls to KYC.
So your reporting is it's less likely?
It is less likely.
Okay, fine.
Shonali Bossack, don't be a stranger. You are terrific and well-versed in this, and I'm curious how the dynamics and the conversations you have with the C-suite change over time. On the broader market, we are seeing some of the declines accelerate, despite the fact that we are seeing rate hikes priced out of the market. Gina Martin-Adams of Bloomberg Intelligence, we're so lucky to have you join us this morning. Gina, I'm curious what your takeaway is from some of the fragilities in the financial system and how it's being borne through the rest of the equity complex.
Well, I think we've learned over time, Lisa, that predicting fear is really a fool's game. I think what we are right now is an environment of fear, and fear can take asset values down to levels that no one can predict. So I think it's really difficult to say. You know, our best case is really framed by the combination of fundamentals and technicals, and unfortunately, the technicals that were really powering the market since October's low have broken down pretty significantly because of the fear that has evolved around the financial sector. We've seen the S&P 500 break through critical support levels. We've seen a lot of sort of optimism really dismantled over the last several weeks. And the result is, you know, there's not a great reason to be a hero here. You've got to find a place where you can find some deep value emerging in segments of the market where you can see a sustainable long-term
I get, Gina, I get the idea of a search for deep value here, and I know you're looking out at PEs of 9 or 6 or 5, whatever it is. I'm making a joke there, folks. But Gina, the fact of the matter is people are revaluing and pricing in growthiness, persistent free cash flow, and the idea that there are selected companies that dominate within their sectors. Are they going to be repriced on a price to earnings basis by price or by increasing earnings?
Yeah, I think this is an excellent point, is what are investors going to be willing to pay for in this kind of environment? And right now, they're not willing to pay for anything. I mean, I think this is the problem that you run into in an environment where fear really takes over the equity market is at a certain point, valuations actually become more attractive. But when you're looking at an index that was trading at 16 times earnings on an equal weighted basis, and the earnings outlook is still so uncertain, you really are taking a flyer on the S&P 500 right now. And that's a really difficult proposition. I think there are segments of the index that have very little exposure to what happens with financials, and to the degree that you can look through some of the fear and see earnings trends emerging. We are at a point in the cycle where earnings are probably reaching their lows over the next quarter or two. And that means that if you can think through where the dynamics of growth are going to emerge for 2024 and back that into evaluation, there is a case for stocks in certain segments of the index. But certainly, are the banks touchable right now? I'd be a fool to argue that they are. They're, not a portion of our portfolio and haven't been for months because of the dynamics of this space.
Gina, we got to run, but just massive shout out to Herman Chan. I know you never speak to him. He shakes when he talks to you, but your bank analyst on regionals, Herman Chan, and his team have been just absolutely superb the last couple of days. Gina Martin-Adams driving equities for Bloomberg Intelligence this morning. And Shonali Basak, I should mention as well, our chief financial crisis correspondent. Lisa, your thoughts as we stagger to the 9 o'clock hour?
That what we thought might be subsiding yesterday and even earlier this morning when we came in is very much still on the table, and that is financial system risk that is taking the priority, at least in the market's view, and potentially for the ECB tomorrow and the Federal Reserve next week, excuse me. I'm looking right now at 2-year yields around the world cratering, going to the lowest levels that we've seen since September of last year, even as we get signs of an ongoing robust economy. At what point do these conflicts, these conflicting goals of central banks come out with something that can try to ease some of the panic?
I will leave you with technical analysis, which, as Lisa knows, really, really works on radio. I just can't say how much that works. Credit Suisse this morning has been extremely well behaved. That is technical talk. Think Chris Verone, who's wonderful at this over at Strategas. It is waltzed along a declining moving average within a big 5 fancy study of trend. The trend is south right now. There have been any number of times in the 7 o'clock hour and even right now where we're trying to lift above that, and we are struggling to do that. There is a dearth of selling right now versus earlier, but critically, off of Yousaf's interview with the Saudi leadership earlier today, the buyers of Credit Suisse are on strike. Coming up with John Farrow on television, Julian Emmanuel to drive the conversation forward. Good morning.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
We've invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and your work. I know I deal with that all the time. This is really a people-first company. Even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that this is something that many business leaders are focused on, and time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at the 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been, and we'll continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. You know, lots of testing, lots of thinking about what could go wrong, lots of research. You know, when I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of, like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
The financial sector turmoil continues. Live from New York City this morning. Good morning, good morning. Equity futures down by 1.9% on the S&P. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York, coming up, Credit Suisse stock plunging to a fresh record low. Top shareholder Saudi National Bank ruling out further assistance, sending equities down and European banks lower, much lower. We begin with the big issue. The turmoil continues. Yesterday, leadership at Credit Suisse tried to inspire calm.
So far, it's pretty calm. We even saw material good inflows yesterday still. Also, you know, I had a client meeting which was very positive on that one. So far it's calm, but I think it's early days to look at it.
And today, their top shareholder did anything but inspire confidence.
Absolutely not, for many reasons, outside the simplest reason, which is regulatory and statutory. We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in, whether it be by our regulator or the European regulator or the Swiss regulator, and we're not inclined to get into a new regulatory regime.
Credit Suisse down 26% this morning alone. Joining us now to discuss, John Hancock's, Emily Rowland, Evercore's, Julian Emmanuel. Emily, first to you. Wow, what a morning so far. What's your reaction to it?
Yeah, John, idiosyncratic risks are certainly bubbling to the surface in areas that were weak to start. And look, this is the way that every economic cycle ends. Unfortunately, the Fed tightens until something breaks. And, you know, there's going to be a confidence issue when the Fed here pushes you to the edge of a cliff. And that's what we're seeing in some of these weaker names. You know, European equities or European banks had outperformed U.S. banks by 40% over the last 6 months. And to us, that really didn't jive with the macroeconomic backdrop, the moves that central banks are making in terms of tightening. And we're seeing some issues certainly here bubbling to the surface.
What a difference a week makes. Last week, we woke up, we were talking about Chairman Powell opening the door to 50 basis points. Torsten Slok of Apollo was talking about no landing. Torsten, moments ago, earlier this morning, said when the facts change, my view changes from no landing to hard landing. Julian, do you agree?
100%. It is absolutely remarkable that Chair Powell teased that 50 basis point hike on Tuesday, and 24 hours later, the financial stress began and obviously accelerated. The problem here is that, you know, while we want to say that there is an idiosyncratic nature to what's going on, you know, 3 banks having been shut in the U.S. and now obviously the stress we're seeing in Switzerland, you know, when does it become more than idiosyncratic? And I think that's part of the pressure that we're seeing now, particularly play out in the rates markets.
Julian, I don't want to put you in a tough spot, but I've got to ask the question. Credit Suisse, how important is that to the financial system?
Well, I think it's important psychologically, if nothing else. And again, you know, the long history of Swiss banking is that there ends up being a forced marriage if it comes down to that. And we're not saying that that's the case. But look, it is a name that's been around for decades, and that is definitely something of pretty deep significance.
Emily, when was the last time a client asked you about a no landing?
You know, John, it's funny. When we started to hear rumblings of a no landing, Matt Miskin and I sort of thought to ourselves, well, that actually isn't a thing, because without landings, we wouldn't have economic cycles. So that really has not been our view. You know, we watch all of the leading indicators really closely. You know, we watch things like the yield curve inversion. I know it's starting to sound like a broken record here. We felt like it was a broken record for a really long time because we've had this almost sort of never-ending late cycle environment where the economic data, especially in the beginning of this year, was coming in pretty decent. You start to hear these rumors or these thoughts around a no landing. You know, to us, it's unfortunately been our view this whole time that we are going to see this not ending well. Owning higher quality bonds, being patient here, waiting for risk assets to become on sale has really been, you know, our logic here, and that's starting to play through today.
Emily, the policymakers got to make a move here. Chair Powell's next week. ECB President Christine Lagarde is tomorrow morning. I've got no idea what she's going to do. She had previously seemingly pre-committed to a 50 basis point hike. I think it's worth pointing out that still we have a split on Wall Street as to what the Fed's going to do next week. Yes, Credit Suisse is down about 29%. That, by the way, is another record low. Just moments ago, 157. We're at 159 right now. I'm looking through the European banking system. SocGen's down 12%, BNP's down 10, close to 11 percentage points lower. And yet here's the split right now. For pause, Wells Fargo, Goldman, Barclays, they say the Fed is done. This market screams the Fed is done. Elsewhere, Bank of America, Morgan Stanley, Citi, they all say this Fed is still going to hike next week. This is what Neil Datter of Renmark had to say. Today's CPI inflation data make it clear that the effort to quell inflation is far from complete. Had it not been for SVB, the Fed would likely have moved 50 basis points in March. Instead, I see them going 25. Emily, where on earth are you on this Fed next week?
By the way, a week is like a lifetime now. I feel like we have a full economic cycle like in a week's time. So there are still some kind of moving parts here. But, you know, central banks globally do have a history of pausing or cutting after these financial events occur in the markets. And clearly we're in a much more difficult place right now given elevated inflation. And I think if the Fed does pause next week, they do risk coming out more dovish and potentially spurring a risk-on move in markets. And let's be honest here, risk assets still are not really reflecting a lot of distress. High-yield bond spreads at about 469 basis points this morning. The longer-term average is 500. You know, we're looking at a weaker dollar versus riskier currencies globally, which is helping foreign markets. We're also seeing a period in which things like, you know, Bitcoin trading at 25,000. So we're really not seeing markets fully reflecting the potential for recession here. So I think that probably keeps the Fed on edge here. I'd give it a sort of 50-50 between 0 and 25 basis points.
Julian, what about you? What would spook you more? If we got no hikes from the ECB tomorrow, or if we actually got a 50 basis point move from the ECB tomorrow?
Well, I think that is really a difficult problem here. I would say no hike. However, what we have to step back and recall is, again, going back a week ago, there was absolutely no inkling from any central banker, least of all Fed Chair Powell, that the kind of events that have unfolded over the last week would in fact unfold. And when we think about it, looking forward to next Wednesday, look, our view is that the Fed's going to go 25. We would prefer that they pause. But then again, part of that is the perception of putting the Fed put back into play. But what we would say to that is that there really is no way to separate the concept of financial stability from inflation fighting, as much as we would like to think that there is in a theoretical academic world. And part of our view that we're likely to go into a recession either late this year or early next is that that will be more of the catalyst to bring inflation down, which is what we're trying to do in the first place.
160 on Credit Suisse. We're down about 28%. If you are just tuning in, you're seeing these moves, wondering what on earth is going on. A little bit earlier on this morning, Bloomberg caught up with the top shareholder in Credit Suisse, the Saudi National Bank, and the chairman was asked about whether he'd provide more assistance to the name. The answer, absolutely not. He went on to say, for many reasons outside the simplest reason, which is regulatory and statutory concerns. Of course, once you cross that 10% threshold, there is a different degree of regulation they would have to face, and right now they're just below that level. Though if they keep their stake the same by the time we get to today's close, that might change as well. Credit Suisse down by 28%. Elsewhere, European banking names are getting hammered too. SocGen, BNP, both down by anywhere between 11 and 13%. Katie Lyons down in DC following all of this. Katie, we talked about the US names to close out last week. This morning, it's all about Europe.
It is. And John, we just have to think about the cocktail here. You take a bank that has been plagued with issues for years, from scandals to outflows to struggles with profitability. Then you take its largest shareholder saying absolutely not to providing more support in the future, potentially for many reasons. And you put them together in a moment at which this market is on a knife's edge, looking for any sign of more risk in the banking system, waiting for another shoe to drop. And this is what you get, John, a record low on Credit Suisse. Right now we have a 159 print, down 29% on the day. Then when it comes to credit, their 2026 bonds plunging to distress levels. We have credit default swaps, and we haven't seen since crisis era with the Greek banks back during that country's debt crisis. And of course, that is bleeding through here to the U.S. as well, where we are fresh off multiple bank failures of Silicon Valley Bank and Signature, and that is what you are seeing showing up in pre-market trading. The energy select sector SPDR ETF as a whole, which gauges how that sector is going to do come the opening bell, right now down about 3%. This is bleeding across too big to fail banks and those regional banks as well. Right now, PacWest, for example, down about 13%. Not only are they contending with any kind of systemic risk that could stem from Credit Suisse, but also the specter of more regulation, because we also understand now, according to our reporting, that the Fed is looking at tightening its rules for banks between $100 and $250 billion in assets, which could mean higher capital and liquidity requirements coming down the pike, John.
Kelly Lyons, thank you. This is where we are. 40 basis point move at the front end of the curve. Your two-year yield right now, 3.85. The curve, 2s versus 10s, negative 40 basis points. A week ago, negative 110. So this curve is re-steepening, taking away some of that inversion, but it's being led by this massive rally at the front end of the curve as we take away Fed hikes and price in Fed cuts. Now, Emily, given what I've just explained is developing in this bond market, is that bullish or bearish for risk assets, for equity markets from your point of view?
It's bearish, John. This is the way that every single cycle ends. You see a re-steepening of the yield curve right before the recession happens, as markets start to price in the Fed cutting interest rates. So the re-steepening of the curve is pointing to us to the way that this ends. We see the entire yield curve shifting down over the course of this year as the long end starts to price in slower economic growth, inflation fears turn into growth fears, the short end moves lower at a more precipitous pace than the long end of the curve. And by the way, what this all means is this is a great environment to be embracing yield. We look at that back up in bond yields over the past year and a half as creating a really attractive entry point, very competitive opportunity. It's all about income. You know, John, I've been talking about bonds for a while, but let's go.
Julian, let's go in a bond market, and let's go right now. What a move we're seeing develop, particularly at the front end of the curve. Julian, from your perspective, here's the important question. There's a lot of people out there that want to play the recovery in this equity market before we've even experienced the recession. Is that a mistake?
Too early, John. From our point of view, we've been very consistent in our message that history shows that bear markets do not bottom prior to the onset of a recession. Obviously, Ed Hyman's view and our view is that you are going to have a recession. And history, again, would say that caution is warranted. We do expect a test of those October lows sometime near mid-year. And again, this whole idea that because yields are backing up, that's a positive, that's incorrect. As Emily pointed out, the correlation between stocks and bonds is flipped, consistent with crisis times such as 1998, 1987, and 1974. Too early, we'll get there towards mid-year.
We'll continue this conversation. Julian, Emily, sticking with us. Big move in the bond market. Treasuries rallying, yields lower on a two-year by more than 40 basis points, 383 on a two-year. In the equity market, one stock getting everyone's attention right now. Credit Suisse is down by almost 30%. The new low for this morning, the new all-time low for this stock is 156, and right now we're just short of 158 at about 157-ish. Coming up, the latest data competing for the Fed's attention.
You have to understand, we had a forecast of a second half recession. We're likely now to have an increased probability of that as a result of the developments that we're seeing.
That conversation up next.
For parents and anyone out there who still doesn't quite understand, what exactly are kids doing on Roblox?
Kids on Roblox aren't just playing, they're learning, they're hanging out together. When they can't be together in real life, they're hanging out on Roblox. They could be playing hide and go seek. They could be pretending they're running a store or a pizza parlor. They could be making the next big game or adventure. So it's really a wide range of things, and it involves doing things together, pretending you're together.
Everybody's talking about the metaverse as something that's going to happen in the future, but there's an argument to be made that Roblox has already built a metaverse. What do you think?
I think we've started. There's still so much innovation to be done, and there's so much invention to be done in this category that it's mind-boggling.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally. We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is not a systemic credit crunch. It is not a massive decline in the underlying macroeconomic environment. It's a shallow type recessionary environment. So it takes time to bring all these things to coalesce, to bring down the rate of inflation and the rate of growth enough to rebalance the labor market. They're looking at trying to separate the two concepts. It's regulatory approach. It's regulatory approach to policy versus its policy with regard to inflation in the labor market.
The last dose of data rolling in ahead of the Fed's March meeting. It's the economic indicators versus financial stability. Wall Street taking sides. Goldman, Wells, Barclays, they say the Fed is done. On the other side, still looking for more hikes this month. Morgan Stanley, Citi, B of A, Mike McKee. Next week is a tough call.
It is a tough call. You've got Deutsche, Citi, and PNC, at least for the moment, with 50 basis point hike calls. Now, those are probably going to change, I would imagine, before we get to next Wednesday. A whole week could go by before the Fed meets. It's going to be tougher for the ECB with everything that's going on. But we did get some numbers today that support the idea of no more than a 25 basis point cut, and that is the PPI coming in much softer than anticipated, actually on a month-to-month basis lower. The core is flat, and X-Trade, which is basically the margins for retailers and wholesalers, up by a lot less than anticipated. You look at what happened with Empire, tertiary index, but a huge drop there, and new orders really went down. Retail sales a little slower, although the control group shows Americans are still spending, but maybe the story's beginning to play out that we have spent enough money. There is a sort of maybe bad news hidden in the PPI that people aren't paying attention to. The PCE is the Fed's index that follows inflation. And one of the things that's bigger in the PCE report is medical care services. And medical care services in the PPI, which will translate into PCE, they're rising. And so that's going to put some upward pressure on the PCE. We'll see how that turns out, but that doesn't come out till after the Fed meeting, so it won't have an influence. I did put in a chart of Empire just to show how much the whole thing fell down, John. It's really quite amazing, a change in the way things have been going in the New York State. But look at the volatility. That's the hard part too. How do you know what's going to happen month to month?
Not just the data. Let's talk about the bond market. Have you ever seen the 2-year in the Treasury market trade like a penny stock?
Yeah,
that's the story of the last week. Look at this morning.
And somebody asked me this morning, what signals should the Fed take out of it? I don't know that you can take anything out of it at this moment because they're being pushed around by all sorts of developments on almost an hourly basis. So how do you know what it is telling you? It's telling you that the market thinks there's less confidence in something. Is it the economy? Is it inflation? Is it the banking system? And so it is going to be an interesting discussion for them next Wednesday, and I would sure like to be a fly on the wall in Frankfurt tomorrow at
dear me.
The ECB.
Mike, can we finish there just briefly? I mentioned this earlier. I'd love you to respond to it as well. We talk a lot about how Chairman Powell doesn't want to be Burns, he wants to be Volcker. Do you think President Lagarde's worried about being Trichet? And I'm thinking of those hikes back in 2011, 2008.
It's a different situation because in this case, they know inflation is established and rising there, but I'm sure she has that example in mind.
Mike McKee, thank you, sir. This move right here, two-year yield, down by 48 basis points. Moments ago, even more than that, 376, 377 right now on a two-year in America. In Germany, we dropped by more than 40 basis points, 242. Moments ago, it was more than that. Julian Emmanuel, Emily Rowland back with us for a final thought. Julian, defense. Treasuries are working for now. I stress for now because I've got no idea what happens later. On the equity side, you say defensive, healthcare, staples, energy. And as soon as I saw the word energy, I wanted to ask you, Julian, energy, how does that fit in?
So energy has been consistently the only sector whose valuation already discounts what we're seeing on the screen. By most rights, you're discounting across the universe of stocks, WTI in the low 60s. Now, that doesn't preclude that that's a stopping point, but for us, the valuation edge is there. And frankly, a lot of investors have given up on the sector. And of course, we still have the potential for the boost via the China reopening.
Emily, have you given up on the sector?
Yeah, John, as you know, we missed that one when commodities were rallying. But to us, it's pretty remarkable to see commodities really breaking down here, breaking through support. You know, given the element of China reopening that Julian mentioned, you know, that's been a key support for commodities, for non-U.S. equities that we see really fading here in this market. So we agree that those more defensive sectors should hold in better. We've remained overweight technology, your classic, you know, S&P 500 tech sector, not your growth at any price, unreasonable, unprofitable growth companies. And we're also seeing a bid for that. Amazingly, quality is finally coming back here. Quality, the best performing factor now year to date. We think that makes sense. Pair quality, pair it with defense, own high quality bonds. That's the playbook for 2023.
Looking at energy right now, the underlying commodity struggling this morning. WTI earlier this morning below 70 for the first time since December 21. Moments ago, Brent crude a drop below 75. First time since 2021 also. Emily, Julian, long week already. Thanks for being with us this morning. Long week. I've said it repeatedly all week. In a world where a bank can fail in seemingly 24 hours, a week is a long, long time to get to Chair Powell next week. Equity futures right now on the S&P down 1.8%. We had some breaking news just moments ago. I want to get to Kaylee for more. Hey, Kaylee.
Yeah, John, breaking news around First Republic, another one of those regional lenders that has been in hyper focus in recent days. Shares now down 19% in pre-market trading after it was cut to junk by S&P Ratings on outflow risk. S&P saying it thinks outflow risk remains elevated, get this, despite the actions of federal banking regulators and the bank actively increasing its borrowing availability. The S&P saying we expect increased wholesale borrowings to further weigh on net interest margin. And First Republic right now falling like a rock, John, down about 20% in pre-market.
Kaylee Lice will no doubt stay on top of that. Kaylee, stay close into the opening bell about 8 minutes away. So here's the story for you if you are just tuning in. Credit Suisse is down by 29%, sub 160, a breakthrough two a little bit earlier this morning. If that wasn't dramatic enough, a break of 190, 180, 170, 160. Earlier on, in the last 10 minutes or so, 156, that's an all-time low. Their top shareholder, who owns just under 10% of the overall company, was asked if they'd provide more assistance. The Saudi National Bank chairman turned around and told Bloomberg, absolutely not, for many reasons outside the simplest reason, which is regulatory and statutory. So that's the latest from them. You see it bleed through this market into the European names. SocGen, BNP, take a pick. SocGen down almost 13%. BNP, the French banks have been struggling all morning. BNP's down about 11%. And you see it priced into the front end of the curve. We are just taking back rate hikes and pricing in rate cuts, both sides of the Atlantic right now. In the Treasury market, the two-year is down almost 50 basis points, 376. In Germany, the two-year is down almost 50 basis points, 237. Chairman Powell's next week. Christine Lagarde is tomorrow morning. Coming up next on this program, the morning calls, and later, Bob Michael, JP Morgan in the studio, 6 minutes away.
So Fabian, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Away from the open at Bow. Futures down by 1.7%. Let's get you some morning calls. First up from Citi, upgrading Truist to buy, saying the bear case is flawed but presents an attractive buying opportunity. UBS says this, initiating coverage on Western Alliance with a buy rating, calling credit concerns overblown. Their stock is down 7.4%. And finally, Credit Suisse upgrading Charles Schwab to outperform, saying headwinds seem manageable and close to peaking. Their stock's up by 0.7%. Coming up on this program, prepare for a hard landing. That's the warning from Bob Michael at JP Morgan Asset Management. That conversation is up next with futures down 1.7%.
On the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
News breaks. No one covers the world like Bloomberg.
This is the biggest issue right now facing Ukraine. Last year was all about weapons. This year to ammunition, as they are facing a potential this spring fresh offensive from Russia.
They are very hopeful that there is going to be a recovery. It's not as bullish as some people were hoping. Obviously, markets today very disappointed with the numbers.
This next president is really going to have to come in quite aggressively to deal with a lot of these economic issues that people are dealing with on a daily basis.
Bloomberg, your global business authority.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
Let's get to work. About 20 seconds away from the opening bell. Equity futures down by 1.7% on the Nasdaq, off by a little more than 1 full percentage point. The Russell, as you know, by now is heavily weighted to the financial sector. The Russell futures right now down about 3% or so. This equity market story, a real struggle through most of this morning. Good morning to you. Switch up the board and get to the bond market. Yields look a little something like this on a 10-year in America. Your yield as follows. Down 23 basis points, 3.45 on a 2-year yield. We are down a whole lot lower than that this morning, aggressively lower. Last week, this time last week, through 5. This morning, south of 4. That's a massive turnaround. And who wants to be President Lagarde tomorrow? Euro dollar, 105.24, negative about 2 full percentage points. We were expecting a 50 basis point move, and now I've got to be honest with you, I've got absolutely no idea what Christine Lagarde and this ECB does tomorrow. That Governing Council 2-day meeting begins today. Crude has had a really difficult time. Difficult this morning. It's down 4.4%. $68 a barrel right now on WTI. A break of 70 a little bit earlier for the first time since 2021. One sector to watch at the open is the financials. Fresh turmoil across the Atlantic weighing on the US banks. First Republic leading the regionals lower after getting a junk rating. Katie Lyons has more. Hey, Kaylee.
Yeah, John, down 22% right now in the first moment of trading. That junk rating from S&P coming as the ratings agency warned of the still remaining risk of outflows, despite the action from regulators and what the bank itself has done. S&P saying that they believe First Republic's deposit base is more concentrated than most large regional U.S. banks. So it is definitely getting hit the hardest today, but those other regional banks are not immune to the selling pressure either. PacWest down 13%, Western Alliance down by 7%, and this is even bleeding through to the big guys, John, the likes of JP Morgan, Goldman, Wells Fargo, Bank of America, all down to the tune of 3.5% to nearly 5% this morning, despite the fact that these banks, seen as too big to fail, are actually benefiting from the turmoil we are seeing in regional banks, in that they are getting a rush of deposits. Bank of America getting $15 billion in new deposits in just a matter of days. So these banks, in theory, are emerging as winners in terms of deposits from this turmoil, but certainly no banking stock is a winner on the day today, John.
It's not all doom and gloom out there, Kaylee. It's not, at least not for the South side. UBS initiating coverage on Western Alliance with a buy rating, saying markets are mispricing its earnings power. The analyst goes on to write, quote, "We think sources of mispricing include contagion risk from the Silicon Valley Bank failure, with shares pricing in something more dire. Given our earnings outlook and the current valuation, we believe the risk-reward skews to the upside." I imagine they wrote that before we saw developments this morning with this stock. Credit Suisse is down by almost 30% this morning. Shares hitting a new record low after the largest shareholder said absolutely not to a bigger piece of the pie. Shanali Basak has more. Hey, Shanali.
John, we've been taking a look at Credit Suisse for a long time now, and if there's any silver lining when it comes to the Credit Suisse story, really what we're looking at here is the idea that they do have a large shareholder. And the large shareholder, when it comes to the Saudi National Bank, the reason they're not doubling down, as they give you in the last 24 hours, is regulatory reasons. But with that said, there's a big question here, and it's a risk management question. What is the floor to Credit Suisse's stock? The question here is, as we've seen in the last couple of weeks here, is that the situation that has looked easing in the past can deteriorate very quickly. The good news for Credit Suisse is in terms of my conversations with money managers, is that the idea that they have gotten inflows when you look at the global banking kind of crisis and pressures we see on the system overall. I would say if you take a look, if you want to draw any parallels with what's happening in the United States and what's happening abroad, what your funding base looks like is just as important as who your clients are. The fact that Credit Suisse is so global, their money might be a little bit stickier when you look at their clients in Asia, but remember, those clients are also under pressure. When you look at First Republic, part of the reason here that it was downgraded was not just the fact that its funding base is under pressure, it's the idea that its client base is so concentrated. There's also the question here of the level of systemic risk you're taking on, and the fact here that Credit Suisse is a globally systemic financial institution. Now, the ripple effects that would have to the market are a big question mark, but I would remind you and everybody here that this has been a story for many, many, many months. It is just hitting now a new turn, and that turn is that new low, not only in the stock price, but also that record widening of the CDS spreads. When I talk to money managers, these are no longer becoming attractive attractive levels to be buying at. It gets harder to make those trades. That would have been a trade you made earlier this year or even last year. But these are questions to be asking the market about now. How do you buy this market?
It's a distressed debt story already. Shonali, thank you for that. I've said this repeatedly over the last few weeks, the last few hours as well. This is a story that's been building not just over the last few years, but over the last decade, arguably with this name. But I'd go beyond saying this is about shareholders, leadership, the people who work there. We all know some tremendous people who work for this institution who will find it increasingly difficult to be engaged this morning with this kind of stuff going on. Joining us now, I'm really pleased to say, with some monster moves in this bond market, Bob Michael of JP Morgan Asset Management. Bob, you're looking for a hard landing now. It's a real change. Let's talk about what's developed in the last week. Can you just describe, give me some insight to what it's been like for you personally over the last week, just working in and out of this market?
Well, if you go back about 6 or 7 days ago, we were facing a lot of criticism that we were too conservative, that we were expecting recession, we didn't own high yield, we were in very high quality assets and extending the durations of our portfolios. How could we do that? The Fed had to keep going to 6-7%. You also look at the low unemployment, wages going up. This was a soft landing. We kept thinking, no, the long and variable, cumulative and lagged impacts of tightening would catch up. And they have. It's come on very, very fast. I don't know that we're particularly surprised. There was tremendous liquidity sloshing around in the system. That's being taken out. We always knew there would be a hard adjustment. But now it's starting to get painful.
You've had dry powder. Have you allocated any of that, or did you believe this is the beginning of something bigger? Dan Iverson of PIMCO called this a multi-month process. Is this the beginning of something bigger for you?
Absolutely. If you think about where we were a year ago, the Fed was just starting its rate hiking cycle. So over the next couple quarters, you're going to get those long and variable cumulative and lagged impacts hitting the market further. So I think this is the tip of the iceberg. I think there's a lot more consolidation, a lot more pain yet to come. So you put your money into the highest quality assets you can find, whether it's government bonds or high quality corporates and securitized credit.
You didn't like high yield. I imagine you don't like it now. Can we put some numbers on things, though, if we can? High yield spreads were through 400 basis points in the last month. We were literally there just the other week. We're north of that level right now. You've heard the people, I've heard the people that come on this show. They say it's a high-quality index. They say the story's changed for high yield. Spreads won't gap out that much this time at a downturn. What do you say back to them?
I say recession is inevitable. The low and high yield or the widened spreads is always during recession. I don't know if it happens before year end or early next year. I'll be patient and wait. What should be disturbing to a lot of those investors is that the problems we're seeing now are in the investment grade market. It's with investment grade banks. It's with banks that had very wealthy client bases. Those are the ones that have come under attack. So it's disturbing for anyone in the credit space.
So numbers, it's not 500 that gets it done for you. I imagine it's not 6. Is
it's
it
a
7?
minimum of 800.
Minimum of 800
minimum
basis
of
points.
800.
Spreads.
We've always been to 800 over minimum in recession. If I think about all the funding that's gone on over the last 3 years, the amount of liquidity sloshing around in the system, we expect more problems.
Is it the last 3 or the last 10? The last 3 years or the last decade that we need to undo?
It's a lot of the last 3 years, but I think we're leaving the last decade behind. I think, look, the pleasant way to look at it is we had a pandemic, we had an overwhelming policy response. Now we've got to take out a lot of that liquidity. You're going to have a painful adjustment, but there are positive things ahead. There's a whole generational transformation to the millennials. So we could see higher highs and higher lows in central bank rates and also in bond yields. But that doesn't get us past the washing out process that has to occur first. That's what we're going to see over the next several quarters.
Just to be clear here, that story of higher highs and higher lows, that's a multi-cycle process for you?
That's looking out the second half of 24, 25, and further out.
We've got to get to next week first. Let's try and do that.
We absolutely do.
Chairman Powell, you're saying hard landing. You seemingly want to pause. It's not about what you think they should do, not about what I think they should do. What do you think they will do?
I think with Credit Suisse on the table, they will pause. I think they should pause. I think hiking rates, either the ECB hiking rates this week or the Fed hiking rates next week, has the potential to be the greatest gaffe since the ECB hiked rates in June 2008. They were watching oil prices going up. I think they eventually went to 140, and they hiked rates to combat that while the entire global property market was melting under them.
I've said this morning. We talk a lot about Chairman Powell not being Burns. We need to talk about Lagarde trying not to be Trichet. The difference, as Mike McKee pointed out, is that inflation now is not where inflation was in 08 or 2011, particularly in 2011 going into the Eurozone debt crisis. Where does that leave the inflation story?
I think inflation is now very backward-looking. You're seeing cracks form. You're seeing the liquidity and perhaps solvency of the banking system come under a lot of pressure. That's going to cause businesses and consumers to pull back. I think you have to appreciate there's credit tightening going on at every single level. We know central banks have hiked rates, so they're tightening credit. You look at the banking system. The banking system, if you look at senior loan officer surveys, they've been tightening credit. And in the aftermath of this week, they're going to tighten it further. And then you look at the non-bank lenders, the people in the bond market, me, the private credit people. We're assessing all of this. We're going to be tightening credit conditions further as well. There's nowhere for growth and inflation to go.
This is happening on the 12-month anniversary of the first hike of this cycle tomorrow. It's a year tomorrow. They've done more than 400 basis points in 12 months. Wasn't showing up in the data in a material way. There was still a real debate about no landing, all that stuff, and it sounds ridiculous now, a week after this. You said problems a little bit earlier. You used that word problems. Can you be specific about what kind of problems you're anticipating now?
Well, there are things right under our nose. If you look at the regional banking system, we've been watching deposit outflows for a couple of months now. The other thing that should be obvious to everyone is there's a structural problem in the commercial property market, particularly central business district office space. We know in many, many cities it's largely vacant. Those were flagship properties. They're sitting in a lot of REITs, a lot of securitizations. They'll probably have to be written down. We've already seen a couple things happen. You've got the Blackstone REIT, you've got the CMBS transaction. There are other things out there that will surface over the next couple quarters.
Let's put some dots together. I remember the last couple of months, you warned about this in private markets, and I asked you about how this might manifest in public markets. When those issues come about, and they finally mark to market in the way that you anticipate, how do you think this is going to spill over to public markets?
Well, I think in a couple ways. I think certainly there's contagion, so people will sell what they think will experience the second and third round effect. I think the public markets, as we're seeing, remain one of the few outlets for quick de-risking. So you can go in and get down in your high yield allocation, you can sell equities. I think the public markets will serve as a buffer for potential write-downs in the private markets.
So where and what is safe right now?
High quality duration. I think
Treasuries?
for sure. And I think I said this last time I was on. I wouldn't be surprised if in August the entire Treasury curve is 3%. That may now actually happen faster.
Well, it all has a 3 handle now, 2's out to 30s.
Yeah, and I thought 3% flat. I don't think you have to give up and carry in a lot of places. There are still a lot of high-quality borrowers in the investment-grade corporate space. You can pick those up at 1.5% higher, live with a little volatility. And also in the securitized credit, the mortgage-backed space, if you do your analysis, there's a lot of credit enhancement there. You can pick up another 1.5% to 2%, but I would stay very, very high quality.
You don't fancy the regional bank debt in this country?
I think I lived through the S&L crisis in the late 80s, early 90s, and it feels like the U.S. banking system goes through this every so often. A consolidation has to occur. I wouldn't be surprised if that's an eventual outcome. There are other places for me to invest.
Bob, let's hope we talk some more through the next couple of weeks, because next week's going to feel like a month or maybe even a decade. Bob, this was awesome. Thank you. Bob Michael of JP Morgan Asset Management. Credit Suisse right now, for those of you following at home, we're down about 28% over in Swiss trading. Here in the United States, about 15 minutes into the session, we're lower by 1.2% on the S&P. On the NASDAQ, we're down, I say only 0.9%. I say only because there's some big things developing. First Republic has been followed very carefully over the last week or so. That was halted for volatility after pairing a drop of 15%. The drop to 15% is just unbelievable. So we're seeing some big moves here in the bond market too. Two-year yield down 37 basis points, 388. Coming up, Credit Suisse plunging to a record low. Its top shareholder ruling out a bigger stake.
Absolutely not, for many reasons, outside the simplest reason, which is regulatory and statutory.
That conversation up next with Amundi's Monica Defend.
To the world of business. Balance of Power is now live from Bloomberg's Washington headquarters at a new time. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis from and about politics' biggest power players. Balance of Power, now weekdays at 5 p.m. Eastern, only on Bloomberg, your global business authority.
What do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view, and I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
The top names in business are on Bloomberg.
AI is real. We're already using it to do risk, fraud, marketing, prospecting, and it's the tip of the iceberg. This is extraordinary. And the other thing to keep in mind, there's good use, but bad guys are going to use it too. So it's a little bit of an arms race in how you have to use it to protect your company, protect your clients, protect data, et cetera. And we're fully engaged.
Nobody covers business like Bloomberg, your global business authority.
Absolutely not, for many reasons, outside the simplest reason, which is regulatory and statutory. We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in, whether it be by our regulator or the European regulator or the Swiss regulator, and we're not inclined to get into a new regulatory regime.
Absolutely not. That was the response from the Saudi National Bank chairman telling Bloomberg it has no interest in providing more assistance to Credit Suisse. Shares of the Swiss bank plunging to new record lows, along with its bonds now trading at distressed levels. On top of the story all morning, Jan Patrick Barnett joins us from Frankfurt. Jan-Patrick, have we heard from this bank yet this morning?
Well, we haven't really, and that's the story of Credit Suisse, isn't it? That whenever there's a headline out there that's not doing well for the stock, the bank is not like very forceful to come out and give us any color and any reassurance about its business and its plan and its everything. Again, like we had this interview with the CEO the other day where he urged that his turnaround plan is for 3 years, not for a couple of months, which is all well and good, but in this moment, it's really hard for Credit Suisse to be able and convince people that they are in a position to turn this around with everything that is happening. If the economy is now slowing, we probably get a recession, then it's going to be even harder.
Stock is down 25%, somewhat of a recovery. Jan-Patrick Banner out of Frankfurt. Jan-Patrick, thank you. 169. Monica Defender of Amundi joins us right now. Monica, thanks for your patience as we work through some of these issues. Are there opportunities on the screen in front of you at the moment?
Well, there are so many uncertainties in face of us that possibly I would stay patient and see what the ECB will deliver next week, what the Fed will be doing. But for the time being, we maintain our underweight into the equity positioning, so a cautious stance, and a long U.S. duration bias.
Monica, in the United States, some banks struggle to manage their duration risk. Do you think potentially the same thing lurks beneath the surface in Europe?
We think that the European story is a bit different from the US one. In particular, the sector seems in a healthier position when you look at the liquidity buffers or also the earnings profile. So what is happening today in Europe seems to us more take profit and repositioning than anything else.
Well, let's look at the repositioning. It's huge. In the Treasury market, the front end of the curve down 46 basis points. I'll get to the German curve briefly. Going into the ECB tomorrow, we're down 42 to 242. Monica, what do you expect from Lagarde tomorrow? The ECB seemingly had pre-committed to 50 basis points. Are they going to follow through with this playing out?
Well, as you can imagine, this is an open debate. We are convinced, though, that the ECB will continue and will hike 50 basis points. If not, it might really imply a sense of fear of financial instability. Inflation is still there, and there are other tools that the ECB might use, as the Fed, by the way, so the balance sheet. So possibly they will release a 50 basis point hike with a dovish tone. It would be appreciable if they do not commit to any forward guidance, because the macro environment is too uncertain to pre-commit in size and potential hikes in the future. What we don't think will happen is that we will have a cut this year. The market has been overshooting over the last 10 days. We remained on our side quite firm, saying rates will go high. We see 350 as a potential terminal rate for the ECB, and 525, yes, and 550 for the Fed.
There's some big calls. Monica Defend of Amundi. Monica, thank you. Some big calls going into some tough decisions. There are no easy calls for President Lagarde and Chairman Powell. I've asked a couple of times already today, what would spook you more if the ECB went 50 or didn't hike at all after committing to a half percentage point hike for much of the last month or so? Equities right now on the S&P, about 23 minutes into this, we are lower by 1.4% on the S&P. On the Nasdaq, we're down 1 percentage point. The 2-year in America, a 2-year Treasury has been trading like a penny stock for the last week or so. We're down 40 basis points on a 2-year. Up next on this program, the Trading Diary.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how
the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
This conversation has shifted so quickly. Guests on this program, just like that. From no landing to hard landing. 25 minutes into the session, we're down 1.4% on the S&P. On the Nasdaq, we're down 0.8%. That's the price action. Here's your trading diary. Housing starts, another round of claims coming up tomorrow. Plus, an ECB rate decision. President Lagarde news conference. Wow. What a difficult position that governing council is in. Secretary Yellen heading to Capitol Hill, then closing out the week with humid sentiment. That survey coming on Friday. Looking ahead to next week, the big day. Fed rate decision, Chairman Powell news conference coming up next Wednesday. I have no idea where we'll be a week from now. From New York City, thank you for choosing Bloomberg TV. Good luck for the rest of the trading day.
For parents and anyone out there who still doesn't quite understand, what exactly are kids doing on Roblox?
Kids on Roblox aren't just playing, they're learning, they're hanging out together. When they can't be together in real life, they're hanging out on Roblox. They could be playing hide and go seek. They could be pretending they're running a store or a pizza parlor. They could be making the next big game or adventure. So it's really a wide range of things, and it involves doing things together, pretending you're together.
Everybody's talking about the metaverse as something that's going to happen in the future, but there's an argument to be made that Roblox has already built a metaverse. What do you think?
I think we've started. There's still so much innovation to be done, and there's so much invention to be done in this category that it's mind-boggling.
Is it important to you to have women in business? Are you trying to be a role model? And have you tried to be a role model for women in the business world?
Well, I think it's really important to have diverse voices at the table, and in business particularly, because most consumers are women also.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees. But for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired 2 consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America, When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as the coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic they had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack of the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venergold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venergold as an opportunity to leave that troubled home. Venergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Venergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Gold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Gold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities in the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't, and the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people like want to unpack that. And so my audience is a lot of them are younger investors who are looking to hone their skills.
Tech can write up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just like attacked that video and were like, you explain things so much better than my boyfriend or my professor, or like I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You know, you do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of, squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now, clearly, this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote-unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen-grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwit, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, The hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price, before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350. Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign the ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
the GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that they're interested in how retail brokerages make money and whether they're keeping the best interest of their customers in mind, but it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are and they're willing to jump on and, ride it.
So whether it's meme stocks like GameStop, meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs to the newspapers or online retailing to brick and mortar. They come in and they're in the same business, but they just do it in such a gigantic cost savings that it causes everybody to switch. Well, that's the risk that happens here, is that it's so much cheaper to just manage your own money. We're not there yet, but costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been written.
Meet Bloomberg's own David Nicholson. Now, his happy place is out in the field, on the open road. But like the rest of the world lately, he's been working from home a lot more than he's used to. COVID-19 has prompted a massive urban exodus as professionals of every ilk yearn for more space to live and work. As a result, rural areas have exploded, and they're poised to experience a resurgence as more and more families pack up and leave the big city to try out life in the burbs. But there's one problem with that. Not all internet speeds are created equal. Anyone who might need to upload or download large files for a living may not want to pack up and move to that cabin in the woods just yet. Now, David's house isn't a cabin, but it is in the woods, and inexplicably, his internet is workable.
My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
It's usually under 2 down and under 0.2 up, so it's often unusable.
Some days it's around 1, and other times it'll drop down to about 0.2, 0.3.
I just want to be able to have internet at my house without having to go outside the normal ways of acquiring internet. It's really frustrating.
We're literally a few miles away from downtown, and it just cuts off.
This is a problem, and the solutions are not there yet, because getting high-speed internet in rural areas en masse is something our providers may simply not be ready for.
If your internet service doesn't have fast download and upload speeds, then you don't have high-speed harmony. You have.
Americans on average pay about $70 a month for internet at home. But in rural areas, it could cost a lot more for a lot less service.
So the pricing for a fixed wireless provider here can be something between $80 and $150 for about 25 megabits per second. However, gigabit service, which is 1,000 megabits per second and symmetrical, is running at about $119 a month or $130 a month.
That's John Paul. He co-owns Spiral Fiber, an internet service provider here in Nevada County, California. And for the past 10 years, he's been trying to bring an affordable fiber optic network to town. It all started when he applied to be part of the pilot program for Google's fiber service.
Across the country, civic boosters have been going to extremes, chanting, singing, and marching trying to get the search engine giant to look at their town.
The internet these days is crucial to be in the world, to be a part of the world, and to be connected to your community.
Google ultimately went with Kansas City, Missouri, which left Paul on a mission to get funding to lay out fiber optic networks for gigabit service. Over the next several years, he would attend conferences and pitch venture capitalists and apply for grants to make his vision come to life.
One of the biggest roadblocks to building infrastructure for the internet here in the United States are the existing large providers. They have their land staked out. They would prefer that nobody come in and compete against them. In 2013, we applied for a grant. We went down and met with the commissioners at the California Public Utilities Commission. It was an arduous process to get funded, but we finally did against all odds. We got a $16 million grant, and then we went out to seek venture capital.
Then, in March of 2020, the pandemic hit the world.
Everybody got locked down, and everybody came home, and everybody started using the internet. And I remember seeing on one of the local fixed wireless providers' websites, they've said, hey, we know you're all staying home, but please don't use too much video, and please don't use too much bandwidth. And I thought, that doesn't work.
The U.S. connectivity gap is far greater compared to countries that are considered its peers economically. Some developing nations actually have better internet than rural America, like in Kenya, which has a state-of-the-art fiber optic network fed in from their coastline. The American connectivity gap does largely affect rural areas that are either outside of service coverage or simply prohibitively expensive. This is Rebecca. She and her family moved to Nevada County just a couple miles down the road from David. They took for granted that high-speed internet would just exist in the area, and it's not something they even bothered to check on before buying their house. Turns out, all they got was dial-up.
We wanted to move where we had a little more space, room for the kids to run around, just be out in the mountains a little bit more. Having come from a bigger city area where Wi-Fi is pretty readily available, we hadn't really considered that in our purchasing of the house, whether that would be an option or not. When school started, and now that we are remote learning with our children and we're doing everything from home, we didn't have the option to do that at our house. So every day when school would start, we'd have to pack the kids up and we'd go to my in-laws' home. They have a little cabin up in this area that does have Wi-Fi already.
Rebecca's situation is the norm in rural America.
According to data from the Federal Communications Commission, just 4% of urban Americans lack access to broadband internet. That's compared to almost 40% of people who live in rural areas. But while that was the case, there were also racial and socioeconomic divides in terms of who had that access. In addition to that geographic difference, low-income African American students, Latino students, and first-generation college students were more likely than others to have only one device at home that's shared among multiple siblings and or lack access to that actual connection.
For most American towns, there's also a lack of competition, forcing internet prices up. And large providers like AT&T and Comcast aren't incentivized to expand service to these rural communities.
This is how Xfinity makes life simple, easy, awesome.
So in our area, we have a small imprint of Comcast, but they're not going to go out to the more rural areas. It's just not cost effective for them to do it as a large company.
In order to lay fiber cable, you're actually physically digging trenches into the ground. And for internet service providers, they're primarily focused on maximizing their profits. And so the fewer customers you have, in any square mile and the more fiber you have to lay, that's just kind of harder to pencil out from a purely economic standpoint.
AT&T released a statement on the matter, expressing the need and desire for government assistance to fund fiber optic expansion to areas deemed unprofitable. Comcast released a similar statement encouraging more public-private collaboration on this effort. Federal agencies do offer grants to help communities build broadband networks, but many have argued that there's not enough flexibility on how to use these funds. The COVID-19 relief package passed by Congress in March and signed by President Donald Trump awarded $43.3 million to 51 projects on the East Coast alone. But it also stipulated that these projects needed to be up and running by December 30th. For contractors who plan projects months and years in advance, it's a scramble to rearrange their schedules to meet that deadline.
So what we've been asking the federal government to consider is at least have, as long as the projects are getting started, knowing the projects are being put into place to expand both remote learning, working from home, and opportunities like that that are truly driven from COVID. We're moving as fast as we can regardless, but hopefully they'll give us some more time.
Talking to John Paul, it's clear that he believes broadband is something that can transform a community and should be considered a public good.
One of the first communities to come on in the United States with full-on gigabit service was Chattanooga, Tennessee. Now, they're a bigger city, but they're a city that was economically in a downturn. In the last 15 years, the city of Chattanooga has turned around in an amazing way. It's a nexus for young people to move to. It's a place where technology happens.
It's not just about logging on to Zoom, to connect with your colleagues who might be in New York City. It's also your ability as a small business, operating in the town of Nevada City or wherever it may be to, quickly upload your payroll documents or something onto the cloud, or to quickly, swipe a customer's credit card. There's just some really basic business functions and mechanics that I think people in big cities really take for granted, and that are just going to be a much bigger challenge for small business owners in rural areas.
Historically, the marginalized people, you call them as untouchables or Dalits, they have been kept away from the center of the knowledge. Once you are born into a caste, it is very difficult for you to grow beyond that. You are stuck in that identity. I think education is the best way of liberating them. So that's how I chose to work in education sector. The kind of education that we are giving to the marginalized people is going to change not just the fate of these communities in Telangana, but it is going to be the source of inspiration, source of hope for all the marginalized in this country.
Greatest blight in India is the system of caste.
For generations of Indians, the social code known as the caste system has defined how people earn a living and whom they marry. Although outlawed 7 decades ago, castes remain a significant factor in deciding everything, from family ties and cultural traditions to educational and economic opportunities. Dalits, people who are on the lowest rung of the caste system, constitute almost 1/5 of India's population of 1.3 billion. Not able to afford the high tuition of private schools, many are forced to attend government-funded institutions, which in the past have suffered from poor infrastructure, lower education standards, and high student-to-teacher ratios. But Dr. Praveen Kumar is trying to change that.
I am currently working as head of Telangana Social Welfare Residential Schools. So totally above 400 schools I manage. These are all residential schools for the students who are historically marginalized but talented and then poor.
My friend also
Of them, 60% are girls and then 40% are boys. because girls are more marginalized among the marginalized. Their voices are always suppressed. My approach to improve the conditions in the schools has been put your eyes and ears on the ground always. Talk to the parents, talk to the teachers, talk to the students, stay in the schools and then understand their problems, their challenges, both in classrooms and then the corridors and the dorms. Then go to the dining halls and see what kind of food they are eating, and then go to their homes and then what kind of food they are getting and what kind of challenges the parents have. One of the important changes that I brought in after I took over was to complete the transformation of mother tongue to English medium, because English medium, as I said, English is the language of emancipation, and language that connects you to the whole body of knowledge in the world. So we had to train a lot of teachers.
Refer to the dictionary also, okay, and find out the new meanings, as well as you're going to describe about. Hey, Richita, how are you? Hi, Sindhu. Fine, thank you. And how about you? I'm fine too. It's been a long time.
Identity is extremely important. There is a scientific evidence to prove that your sense of identity is extremely crucial to your growth as a successful human being in your life. If you accept an identity which is very humiliating, which reminds you of very painful past, I think that identity will not help you to grow. I'm not saying that you should forget your past. I'm not saying that, but that should not be the bubble in which you must live always. Sweros is an alternative identity. S stands for state, W stands for welfare, Aero, SW and then Aero is Swero. So the idea is your dreams have to be skybound. So that is what we are trying to achieve by changing the identities. Like, you say, I'm a Swero and I aim to be a doctor. I am a Swero, I aim to be a top-notch engineer. I am a Swero, I aim to be a top bureaucrat of this country. I'm a Swero, I want to be a very good actor or, a musician in this world. So these are the positive images that are associated with the identity. Just to give an example to you, in 2012, in our institution, we used to produce about 6 doctors per year. But because of our, this self-liberating ideology of Sveroism, we have, this year, we have produced about 189 doctors. This is phenomenal for any poorest of the poor people. You know how difficult it is to get into medical colleges in this country. So, but today, because of this ideology, the students have been able to achieve this, feat. Pujita has been a farm laborer, and her parents themselves are agricultural laborers. And then this girl used to sell vegetables, but thanks to the residential education institutions, she came to the Gaulidoddi campus, and then she toiled very hard for 1 year, despite many problems. And today, I'm so happy to share with you that she has joined one of the prestigious medical colleges in the state of Telangana, Usmania Medical College, and then in future, she hopes to be a gynecologist. So this is the journey our children are hoping for. Similarly, the Mount Everest expedition. Mount Everest expedition, we are very fortunate enough to place the youngest ever female in the history of this world on the peak of Mount Everest. How did this happen? It's all because of an ideology that helps you to liberate yourself. We brought a lot of extracurricular activities, and most of them got institutionalized now. So, for example, music. Similarly, the games. We have so many coaching academy. We have boxing academy, we have wrestling academy, we have handball academy. So we have, kabaddi, that the traditional Indian sport. we have golf. We have introduced the golf also. Like golf is generally played by so-called rich people, but today even poorest of the poor people also are being trained in golf in our schools.
Wow.
So our intention has been to give all 360 degrees, type of opportunities to the students, so that whoever is interested in whatever activity, they can go and then do it. Break the barriers, break the fence, at least mentally, because poor people have been programmed to be victims, programmed to be subjugated, programmed to be on the margins, always, programmed to feel inferior. We wanted to change on that. There are certain games which are exclusive to rich people. There are certain languages which are exclusive to middle class and upper middle class in this country. To put it in one word, the sole aim of introducing all these co-curricular activities is to break the stereotypes which are recklessly imposed on these people.
Their stereotypes Dr. Kumar knows all too well. Born a Dalit, his grandparents were labourers and access to the village well was restricted. Dr. Kumar credits his parents' belief in the power of education with helping him realise his aspirations. He went on to join the Indian Police Service, attended Harvard University, and then began pursuing educational reforms back home.
I attribute whatever I am today, it's to my mother primarily. They educated me in the village, although there were no good schools. So then I stayed in social welfare hostels, the hostels which are managed by government for the poorest of the poor kids. I passed with reasonably good grades. Then I went to university, and then I faced worst form of discrimination in the universities. Like there were, in those days I'm talking about, so the bathrooms and the toilets were exclusively meant for scheduled castes and scheduled tribes. We used to fight discrimination on one hand, and then again, try to excel in academics, day in and day out. So that's how I came to education, because I deeply believe that education is the only important weapon that can really, place the poorest of the poor people from a very victimhood orbit to a prosperous orbit. I think in future, this is going to be a game changer for the marginalized in this country.
If you look at a thermal image of a city and then compare that to a map of vegetation, you'll find that where there's greenery, the temperature is lower. That's because things like asphalt, concrete, and shingled roofs absorb more heat from the sun than trees. This is the urban heat island effect, and it accounts for higher temperatures in cities, often by several degrees compared with their surroundings. It's becoming a huge risk to human health as growing urban populations exacerbate the heating effects of climate change. Heat waves kill more people than any other extreme weather event, more than tornadoes, hurricanes, and even floods. That's why urban heat island mitigation strategies are being studied in Singapore by a group of researchers. The government-backed project called Cooling Singapore is now in the process of combining everything they've learned to create a digital tool that can help cities all over the world, starting with Singapore. In Singapore, close to the equator, temperatures regularly rise above 32 degrees Celsius or 90 degrees Fahrenheit. And the
the city structures only make it worse.
And that is also the case for Singapore, which is basically a concrete jungle, more urbanized, more developed city. And even in Singapore, what you have is a situation whereby there's a temperature difference of 7 degrees Celsius between the more urbanized and the more rural areas.
The government has taken drastic steps to keep temperatures down. This is Gardens by the Bay, an award-winning park, and inside this greenhouse is a pleasant 24 degrees. That's because the dome, along with 24 nearby towers full of thousands of people, is chilled by what's probably the world's largest underground district cooling system. It uses a large central plant that cools water and then pipes it into banks, residential towers, an exhibition centre, shopping malls, and the city's iconic Marina Bay Sands hotel and casino complex.
So one of the biggest perks of using this system for the buildings is that they can save 40% in terms of electricity usage compared to your traditional air conditioners.
And with Singapore relying on natural gas for most of its power, this new system means emission savings equivalent to removing 10,000 cars from the city's roads. That has big implications for the rest of the world. If things stay as they are, more than a third of the world's electricity could end up being used to cool buildings and vehicles by 2050.
As the world gets hotter, gets warmer, there is a greater need for air conditioning and as well as refrigerators, for instance. And the more people are buying these household appliances, the more energy usage they use, and they release heat more, and that then exacerbates climate change.
It's a vicious circle. And so since 2017, researchers at Cooling Singapore have been identifying design solutions that reduce our need for so much cool air in the first place.
One thing many cities have in common, and that's the importance of vegetation. That's a very important measure to mitigate the urban heat because of the shading effect, of course, and the psychological effects of the vegetation, and also because of the possible evaporative cooling effect of the vegetation. Vegetation can be, of course, on the ground floor in form of trees and shrubs, and you can walk under them. This is the so-called canopy layer that the vegetation forms above us. But vegetation can also go up the facades of buildings, and it can go to the roof of the buildings.
Luckily, Singapore has been striving for the Garden City feel for quite some time. It was a vision initially introduced by then Prime Minister Lee Kuan Yew in 1967 to make life more pleasant for people. And today, Singapore is one of the world's greenest cities in terms of urban vegetation. Kampung Admiralty, a community centre that contains health facilities and social spaces, now provides more green space than the plot of land it was originally built on. It's topped by a roofscape of staggered terraces covered in local plants, which functions as a community park. And a village green in the centre that contains farm plots for residents to tend to. Park Royal on Pickering was designed as a hotel in a garden that doubled the green growing potential of its site. There's now 15,000 metres of sky gardens, reflecting pools, waterfalls, planter terraces and green walls. And the government has big plans as well.
Singapore actually has a plan to plant 1 million trees and add more green spaces over the next 10 years. It is actually a mix of wanting to reduce the urban heat island effect, but on the other hand is also to get the people to be more connected to nature.
But it's not enough. The city-state has still been warming twice as quickly as the world average over the past 6 decades. That's why Cooling Singapore has developed a catalogue of other potential heat mitigation measures.
When you try to mitigate the urban heat island effect in a city or in any building, in a village as well, the first place to start is by shading of the windows. You have to keep areas clear so that the wind can move through it. Water of a certain depth can act as a very good thermal buffer. If you have to construct heavy buildings such as high-rises, at least you can make the surface, the facade, less heavy, and you can protect it from direct sun penetration. We have to make sure that no combustion engines will be in the city in the middle, in the medium to long-term range. So ideally, the electricity production is outside of the city, and you bring just the clean electricity into the city. You can at least minimize the use of energy in the city, and you can start to slowly convert the roofs, the facades of the city into production areas for renewable energy. In Singapore, unfortunately, this is a limited option, but in the long run, it could produce up to 20-25% of the energy, of the electricity needed in Singapore, if all the roofs and the areas in the buildings, on the facades would be used to do that.
With so many different ideas, Cooling Singapore is also designing a virtual model of the city to test them out. It's called a Digital Urban Climate Twin, or DUCT, that will calculate how each element of the city's design will impact the urban heat island effect.
That means we model not only the geometry of the buildings digitally, but also we model the transportation, the insulation, the temperature, the radiation coming from the sun, the weather, the local climate, the even very, very microclimate of the city, the water, the movement of people in the city. We can invent scenarios, we can design scenarios, test them before we actually build them, and if they test very well and we are sure that they will function, then we can start to build them and put them into reality.
Singapore will be using this new tool to figure out which actions it should take next. And the model can be applied to any city, whether it needs to keep heat out or keep heat in, which will ultimately save energy, slow climate change, and improve our quality of life.
So this is something that Singapore will be able to export, maybe even together with its city development systems that it already has. Singapore is one of the very few cities in the world that really combine this scientific approach with a very well-established urban redesign and urban design approach. Through its agencies and the combination of its agencies, it has achieved a lot in the past. If it keeps following the scientific path and the combination with the other knowledge in the city already, we think that it will be a very comfortable and very livable city in the future, even more than today.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage, and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel? 1,
you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January and February, that's a reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges. Or on any video, you can hit the join button, and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you posted on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, when boring things were happening in the game, I would ramble on about, movies I'd watched or books I'd read and, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. My first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So don't forget to smash like and subscribe and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is live stream shopping, one of the hottest trends in China. Every night, tens of millions of people watch live shows hosted by influencers like Thea and buy the products they recommend. On e-commerce and social apps like Taobao and Douyin, the sister app of TikTok.
我觉得已经改变了大家的购物的方式。其实各种各样的产品，哪怕你不买，你也可以来看。当然，你看了，你就有可能会买。
It's not about, only shopping. It's about the experience. It's about having fun. You got to see 3D. You got to see in some kind of action. It's almost like a theater act.
The internet craze has taken over China. By the end of 2020, the country had almost 400 million live stream shopping users. China's live stream e-commerce market has also grown dramatically, with an estimated value of $161 billion in 2020. It's becoming popular outside China as well. So, is live streaming the future of shopping? Live streaming is not a new thing. In China, it started in 2015 with the rollout of 4G. And it was first used for entertainment and socializing. Many live streamers performed for their followers or chatted to them, making money by receiving virtual currency and gifts. In the West, live streaming is mainly the domain of avid gamers. In China, it's broken into e-commerce.
China actually has a very big e-commerce empire, so it uses these super apps, what we call that you have payment, you have search of information, you have recommendation system, and you have huge amount of goods available on the platform, and as well as a lot of consumers. So with this advantage, they merge these features of live streaming to make the influencers actually sell goods.
Here is a perfect choice: nice neutrals, beautiful print, nothing overwhelming, and the warmth and comfort of flannel. This is item.
Traditional TV shopping involves a one-way direction, whereby a host introduces a product, demonstrates certain things, and say, call this number or something. But live stream shopping is live. That in itself is a very, very big difference. It causes different psychology. And live stream shopping is a very entertaining way of actually engaging someone else.
When you shop, actually, this live streaming video will continue. It will minimize into a corner, and you can buy the items and pay all on the same app. And after that, the live streaming screen will just enlarge by itself, and the promoter will come back to screen. So it's very convenient.
Taobao, one of China's biggest e-commerce platforms owned by tech giant Alibaba, added a live streaming function in early 2016. In the following years, other e-commerce and social platforms like JD and Douyin also integrated this feature.
开头的时候还是有很多的挑战的，对画面的这个流畅，然后是否能够很真实的去还原商品，它其实在这个上面是有很高的这个门槛跟技术的这个卡口在的。不管是我们的这个用户的接受度，还是商家的这个上手的这个难度都很高，但是这几年下来，基本上难点在不断被突破的。
Over $70 billion worth of goods was sold via live stream on Taobao in the year through March 2021. Latest surveys show that over 60% of live stream users in China were watching shopping shows, and over 65% of them shopped at least once via live stream. In 2020, live stream shopping got a huge boost during the pandemic, when millions of people were in lockdown and many retailers were pushed online.
People, during the lockdown, felt like there's a need for more social interactions. This live platform creates an interesting kind of environment that gives people the sense that I'm actually interacting with you. And then live stream shopping brings in a lot more variety of things that people could buy and satisfy, the sense of losing control, especially during the pandemic.
At the heart of this craze are the top influencers who have tens of millions of followers and sell products worth millions of dollars every night. They often use their star power to get bargains from retailers, which in turn boosts their own sales and influence.
So if you think about China's live streaming, you have to know the king and queen of the influencers. The the queen of live streaming, Via. She is actually having the biggest viewership and the biggest sales volume for a long time on Taobao platform. She can sell everything from like Gucci sunglasses, lipsticks, homes, and cars. One time she offered her followers to go on a Tesla ride with her, and she even, for once, sold a rocket launch in her live streaming room for 40 million yuan. The king will be Li Jiaqi, more widely known as Lipstick's brother. He used to be a cosmetic sales before he turned into live streaming e-commerce, and he knows a lot about the cosmetics. So he's the one that will actually put the lipsticks on himself when he's on the show.
Top live streamers like Via and Li Jiaqi have become celebrities in China and can earn millions of dollars a year. Although not everyone can be as popular, mid-ranking live streamers like Tiffany still earn a good income through sales commissions.
如果说单从收入方面来讲的话，那主播的收入是比普通的工作要高很多。但是呢，主播这个工作时刻对身体，包括对精神都有很大的一个考验的。就是每天需要集中精力，然后长达5-6个小时，这种状态是很累的。而且这5-6个小时的话，你是脑子是不停的，然后嘴巴是不停的，然后手也是不停的，眼睛也是不停的。像我们做主播，不是说单一的只做直播一件事情，然后还会有选品的一些工作，然后还会有一些其他的事情排在里面，其实是没有个人生活的。那我觉得增强粉丝影响力的话，不是说某一件事情。可能今天做了什么事情你就增大了影响力，而是每天不断的内容的输出，粉丝不断的可能对你的了解，慢慢的信任你。
没有芝麻酱的味道，如果吃不习惯的话就慎买。
A lot of successful live streamers are generally very good at communication. They're very good at articulating very simply what a product does, what a product doesn't do. In order for them to sell, they need to be trustworthy and appear trustworthy, and they need to show in some ways that they're authentic, right? So for Via and Li Jiaqi, they are able to articulate that quite a bit through their body language, through what they say. For example, Li Jiaqi will always sometimes say bad things about certain products because to him that's his honest opinion, and sometimes people want to hear that. And so they seem very credible, they seem very trustworthy, and don't forget, they're also very entertaining and very interesting. If you're familiar with Li Jiaqi, he won a Guinness record for like the most lipstick applications to models in like 30 seconds. So if you're able to create a lot of buzz with interesting things that you do, people who may not want to buy lipsticks will also stream in just to watch what he does. And then from there, you might get hooked.
这就是你一般女生出门的时候涂的口红的颜色。
Live streamers also use sales techniques such as limited time or supply. This sense of scarcity can often encourage viewers to buy.
The platform in itself creates and enhances some of these things because you see it live. Something we call social proof has taken over, meaning that, hey, other people are interested, other people are joining in, other people want the same product. And they add it in the chat and they ask questions and they say, oh, I want this too. What happens then? It makes the whole product even more scarce.
But it's not just influencers. Local farmers, luxury brands, even mutual funds have also started their own live stream shows.
Working with very top-tier live streamers can be risky. It's not necessary that the benefits will end up with the brand. So we see company executives opening their own shows, and we see like P&G have their own sales room which runs shows every day as well. We also have like local governors in like small towns to sell their agricultural products. So the live streaming is definitely transformed the way product owners can think about how to reach their consumers, and it enables a lot of players to actually sell.
Live stream shopping is going global. Merchants in Southeast Asia have embraced this trend. And in the West, Amazon has upgraded its live streaming function, adding interactive features like chat rooms. Companies, including Google and Facebook, are also developing and investing in technologies to integrate video and e-commerce.
直播电商它其实已经开始成为主流，它未来的发展空间跟潜力都是巨大的。
接下来大家会越来越依赖这种购物方式，会变成一个比较日常化、比较规范化的这么一个趋势。
If you look at the numbers alone, their numbers alone, Li Jiaxi's numbers or Via's numbers, you know that they can sell and you know that they can generate revenue. Are they able to sustain it over a long period of time? It depends on how innovative they are at changing some of the things that they do.
But you can't expect consumers one day turn into virtual shopping for good. There will be the nature of us that crave to go into the store, to touch the goods and actually wear it and see how it looks like and walk around in that with our friends. And those things wouldn't be replaceable with live streaming.
You could imagine that the oceans are actually the largest battery. We're storing huge amounts of energy in the oceans. The wave motion can be very deep. It can extend down several hundred meters. And once it gets to the near shore, from about 50 meters, the whole water column is moving backwards and forwards.
As we search for ways to reduce our reliance on fossil fuels, some are looking to a largely untapped potential source of renewable energy. In theory, waves off the coast of the United States alone could generate over 2 trillion kilowatt hours of electricity a year, enough to power more than half of the country.
Waves intensify and subside not as quickly as the wind, and that means that it can produce a smoother power generation curve. One of the potential advantages of wave energy is that it could act as a complementary source of power compared to other renewables on the grid if it were to be scaled up to commercial scale.
For decades, engineers have been trying to convert wave energy into electricity, but a host of technological and financial challenges have complicated their efforts.
In the years from around 2006 to 2015, there were a spate of bankruptcies in the sector, and this was largely because of a lack of kind of continuous proven projects out at sea with reliable electricity generation.
Since then, companies have been trying to develop the technologies at a steadier pace and with a smaller cash burn. But the same questions remain. Can companies develop devices and technologies that actually work? Is wave energy just a novelty or something that can become a major renewable energy source?
The sea is a very challenging environment within which to operate a power project. So seawater is corrosive and conditions are very rough. So this means that power projects don't have a very long lifetime, and it increases operating and maintenance costs.
Partly because of that, many early wave energy projects hit rough waters, such as the Palamas Wave Energy Converter in Portugal and the Isla Limpet project in Scotland. But that hasn't stopped others from trying.
Companies are focused on testing projects out at sea, proving their durability, trying to raise capital and bring down cost. The sector hasn't really converged around one single technology design, and companies are kind of undecided about which design works best.
Finland-based AW Energy is a veteran in the sector. The first proof of concept of the company's device was made in the 90s after diver Rauno Koivusari observed the strong back-and-forth movement of a hatch cover in a shipwreck in the Baltic Sea.
The waves are generated far from the coastline, so the wind blows on the surface of the water, causing the water particles to rotate. And that rotation extends deep down below the surface. And the waves can be very long. They can be several hundred meters long. And as they come into the near shore, this rotational energy turns into an elliptical energy and eventually backwards and forwards. As you probably noticed if you've been swimming on the seashore in large waves, you're pulled in and out. That's the energy that we're extracting. There's a sweet spot where we deploy, so around 10 to 15 meters of water depth. That's where there's still strong wave energy coming in.
After years of research, prototyping and testing, the company has deployed Wave Roller, a 350 kilowatt device in the waters of Portugal. Wave Roller has an 18-meter wide and 10-meter high steel panel fixed to the seabed via a floatable foundation. The panel moves back and forth with the waves, capturing the energy.
It's submerged in the depth of 15 meters, so it's protected from the extreme waves. We generate electricity by capturing the movement with hydraulic circuitry in a machine room underneath the surface. That hydraulic energy we turn to electricity with hydraulic accumulators and hydraulic motors and also a generator.
The Wave Roller has survived large waves at sea for over a year and delivered electricity via an underwater cable to the grid in Portugal. Meanwhile, the company has won a €2.5 million grant to work on an upgraded version of the Wave Roller, aiming to increase the electricity generation capacity to 1 megawatt. The upscaled device would have a bigger panel, 2 power takeoff units, and improved software to control the energy production.
We have taken into use a wave prediction algorithm that kind of tells us what kind of waves are coming into our device. That gives us few seconds to prepare for capturing more energy, and the difference in that is significant.
Our future plans are to deliver technology around the world. So I'm hoping we can be working on delivering technology to projects in Asia and also in the American continent as well.
Meanwhile, Israeli company Eco Wave Power is taking a different approach to capturing the power of the ocean. For the company's founder, Inna Braverman, developing new sources of renewable energy is a personal mission.
I was born in Ukraine in 1986, and 2 weeks after I was born, the Chernobyl nuclear reactor exploded, causing the largest in history nuclear disaster. I was one of the babies that got hurt from the negative effects of such explosion. I had a respiratory arrest and a clinical death. Luckily, my mother, a nurse, approached my crib on time and gave me a mouth-to-mouth resuscitation, which saved my life. I got a second chance in life and decided to do something good with it.
Growing up, Inna wanted to be a politician to positively change the world. After working as a translator at a renewable energy company, she decided to change paths.
Solar and wind energy were fully commercialized. There were a lot of amazing technologies implemented everywhere. I saw that wave energy, although it's an immense source of electricity, the biggest companies in the world are trying to develop wave energy with no success. And there was kind of a race going on in the world of who is the company that is going to develop a viable wave energy solution first.
In 2011, the then 24-year-old Inna co-founded Eco Wave Power. Instead of installing devices offshore, the company's devices are attached to existing breakwaters, jetties, and piers.
Our technology is very cost efficient, especially in comparison to the offshore technologies, because we don't need any ships, divers, underwater mooring or cables. We install on existing man-made structures, and all our expensive equipment, the generator, the hydraulic conversion unit, the automation, is located on land just like a regular power station.
This is the EcoWave Power conversion unit that has been operating in Jaffa Port
since 2014 until 2020. Here you can see how the technology works. Basically, the floaters are going up and down and pushing the hydro cylinders, which transmit biodegradable fluid into land-located accumulators. A pressure is being built. The higher the waves, the higher the pressure, which is used to turn the hydro motor, which is turning the generators. The whole system is controlled by a smart automation system, which you can see right here. And in case of upcoming storms, the system automatically raises the floater above the water level and keeps them in the upward position until the storm passes.
The company has been operating a 100 kilowatt grid-connected device in Gibraltar since 2016, which is enough to power 100 households. Currently, Ina and her team are working on another 100 kilowatt project at the Port of Jaffa in Tel Aviv.
The project will be also the first time in the history of Israel that wave energy will officially connect to the electrical grid. And our goal going forward is to expand it to all suitable breakwaters in the city of Tel Aviv and to supply a significant part of the city's electricity needs.
Today, engineers and entrepreneurs are still trying to crack wave energy. Globally, only a few hundred kilowatts of wave energy are deployed, compared with gigawatts of offshore wind. But the field has come a long way in recent years, and with the right engineering solutions, this new power source could eventually become competitive with more mature renewables like solar and wind.
I would have a lot more confidence in the success of wave energy companies today as opposed to like 20 years ago. But in the next few years, or maybe the next couple of decades, it will be more likely to be used in remote locations like islands that are otherwise dependent on expensive diesel power, or out at sea on gas decommissioning rigs, or for powering underwater autonomous vehicles.
So definitely, wave energy can compete with other renewable energy sources, but I personally believe that this is not a competition. In order to have a 100% renewable energy friendly world, we need all renewable energy sources to work together.
Who are all these people from? Who are all these people from?
So can you please tell me? I'm not going to... please wait.
You know, I've covered a lot of companies. I've covered a lot of Machiavellian companies where, you know, people play rough. I don't think I've ever seen anything on the scale of Nissan.
He is making you, but you act for this one. I mean, it's corrupt. The system is...
One of the most dramatic elements was Ravinder Pasi's home being raided by court officials in Yokohama.
You scared my wife. You scared my children. I worked in this for 16 years.
So Rav Passy's journey into the darkest recesses of the Japanese corporate world started when he was the general counsel, the highest corporate lawyer position in the company.
In the past few minutes, Nissan has revealed that its chairman has been arrested after allegations of serious misconduct.
He was tasked with investigating Carlos Ghosn. And he was told, conduct an internal investigation and get to the heart of the matter. And then along the way, he started to notice serious conflicts of interest.
He is one of the few people who knows an extreme amount of detail regarding the alleged crimes by Carlos Ghosn. And he's now ready to tell his own story on the record about some of the events that happened.
My name is Ravinder Passy. I'm the former Global General Counsel of Nissan Motor Co. Limited. And you could say, yes, I had a front row seat in terms of what was going on.
When Carlos Ghosn saved Nissan years ago, he was depicted in Japanese comic books as this hero, and now maybe we'll see comic books where he's the villain.
In corporate Japan, Nissan was quite an unusual company. It was led for 2 decades by a non-Japanese executive.
Well, Carlos Ghosn was a hero in the Japanese business world. If you had a global business celebrity in Japan and worldwide, it was definitely Carlos Ghosn.
In a country with few foreigners at the top, he stood out. But over the years, he saved Nissan from bankruptcy, allied with Renault and Mitsubishi, and turned the alliance into one of the most competitive in the world.
Yet as the years went on, I think his ambitions changed a little bit. He started thinking about legacy plays, and one of them was to really tighten the alliance between Renault and Japan. And unbeknownst to him, there was a contingent of senior Nissan executives that were really felt threatened by that move. They really thought that they would lose complete control of the car company, and even in the government, there was probably a little bit of anxiety about a national champion in the auto industry falling under full-blown foreign control.
Carlos Ghosn was an auto industry leader, respected by many in Japan. Now he's in jail.
The arrest of Carlos Ghosn came completely out of the blue. This was in November of 2018. He was coming to Japan on Nissan's corporate jet for a regular executive meeting, and he was met on the tarmac by Japanese authorities who whisked him away to jail and charged him with financial misconduct crimes.
So what happened was that a power struggle ensued inside the company, and somewhere along the way, it was criminalized. By that I mean that there were allegations leveled at Carlos Ghosn about the way he reported his pay to Japanese authorities, the way he handled money inside the company, that in other contexts might have been a board action, might have been handled internally. A number of executives at Nissan decided to take this difference and take it over to the Tokyo prosecutor's office, and that unleashed a chain of events that would shake the entire auto industry.
So after Carlos Ghosn was arrested, Nissan launched an internal investigation into the events that led up to his arrest.
So Rav Passy was tasked with investigating Carlos Ghosn, and he was told, get to the heart of the matter, find out what Carlos Ghosn did wrong and bring it to our shareholders.
It's really complicated because you had various things coming out of the weeds. 2018, the investigation has started, and we become aware of matters in terms of conflicts, actions by certain individuals that cause some concern because things might not quite be what they seem.
So in our story, we really took a close look at Harinada and his role in Carlos Ghosn's downfall.
Harinada is one of the most fascinating figures inside Nissan. He's also a lawyer. He's originally Malaysian.
Hello, Mr. Hadi.
And he had a meteoric rise through the company and became very, very close to Carlos Ghosn and other top figures. He had a front row seat at all the major strategic deliberations at the company. And when he discovered that Carlos Ghosn, as his final legacy play, was going to tighten the relationship between Renault and Nissan, he made a decision to go against Carlos Ghosn. And he became one of the key figures that decided that Carlos Ghosn had to go.
Harinada was somebody who actually recruited me into the company, so I have a long-standing relationship with him, or did have a long-standing relationship with him. For many, many years, he was a mentor. I had doubts about the credibility of the process right at the start. Harinada had a plea deal with the Tokyo prosecutors. Now, that suggests he was intrinsically involved in some of the wrongdoing, or the allegations of wrongdoing, and it just didn't smell right, just doesn't sit right.
So there was a basic conflict of interest. In other words, Harinada had to deliver results to Japanese prosecutors to avoid his own criminal liability, and he's accusing and leading the investigation of Carlos Ghosn.
Some of the people who had been involved in the original alleged crimes were also looking into the affairs themselves. Ravinder Pasi began pointing out some of these conflict of interest issues. And the reason for that is essentially his concern was for the company. If the company's own investigation into itself was compromised, that could lead to a very weak position in various lawsuits that it was dealing with across the world.
I had discussions with Harry, discussions with the statutory auditors about these conflicts, discussions with HR about some of these conflicts, because at that point, we reported into him. You know, at the time, everything was quite, as you can imagine, it was, we've got to do this, we've got to do that, we've got to move fast. But when you step back and look at some of these things, you just think, my God, what was going on here? Because me, members of my team, were being placed in immediate danger. Your chairman's been arrested, a representative director's been arrested. They both happen to be foreigners. And then now what we need to do, we're being instructed to do, is certain compliance professionals need to go into properties in Brazil, for example, and retrieve evidence. They've got to do it very carefully, because if they don't do it carefully, they're going to get convicted of criminal activities. And likewise, when a team of lawyers were commissioned to go to Lebanon, I mean, one of my immediate concerns was, why are lawyers from Nissan being sent to go to Lebanon to retrieve evidence? These are just lawyers, they're corporate lawyers from Nissan. You had revelations that a number of executives had benefited from share appreciation rights when they shouldn't have. I mean, you know, substantive amounts of money being taken by these guys when they weren't entitled to take them. And you do think, yes, how is this going to look later on? It's going to look quite concerning. So that triggered, for me, the sort of assessment that, well, I'm going to have to do something, because up until this point, I haven't put down on paper these conflicts and these issues.
So Rav Pasi makes a fateful move. He writes this letter to the board listing every suspicion he has in great detail, backed up by evidence, backed up by memos, of why this internal investigation had serious problems. He sends the letter to the board, and it's crickets. He doesn't hear much of anything.
Nothing happened thereafter. Nothing at all. Just like it just gone into a black box.
And he began to suspect that there was a desire, even at the highest level within Nissan, to kind of sweep these conflicts of interest under the rug.
Unfortunately for me, I think, again, with hindsight, people must have thought that this is the nail that's sticking out, and we can't have this. Within 3 days of me submitting that to the board of directors, that letter to the independent board of directors, I was removed from the Goan Executive Conduct Matters. I was then told that I could not attend board meetings anymore. And up until that point, I had attended every single board meeting. I was then also told that after 8 years of being in Japan, I'd be going back to the UK. It eventually transpired that I'd be the VP of Projects and Transformation, managing a team of 3. So you can imagine what this feels like at this stage. Almost an arbitrary removal from Japan, where I've lived for 8 years, had 3 children there, my family has grown up, and we've been settled there, having a few months earlier been promoted to vice president at a global level, to being almost demoted.
So Pasi was essentially being reassigned to get him as far away from the internal investigation as possible, and also to a certain extent in retaliation to some of the issues that he brought up regarding the internal investigation and Harinada.
What happened to Rav Pasi can be seen as a series of corporate humiliations. I mean, first of all, his immediate responsibilities were taken away from him. Eventually, he lost, the coveted general counsel title. But it didn't stop there. Toward the end of his stay in Japan, Rav and his wife were convinced that they were being followed.
During that period, I'd noticed that whilst driving my car, I'd have other cars following me. First time I noticed this was around mid-March, and I was driving, I can't remember where I was going, but this grey van, small van, just literally started following me. And I noticed that there was somebody in the car taking pictures. And lo and behold, we were absolutely being followed either by people on foot or other individuals, 2 or 3, normally 2 burly men in a car, different cars at different times, following us around. They were following the family as well. And, given I'd seen the Nissan security department behave in a very, very egregious manner with others in terms of following and surveilling, I was very concerned as to what they were doing and who they were giving this information to. Because if they're giving this information to the authorities, you do think, why? What's going on here? I mean, this is just not normal behavior.
And this all culminated in a rather dramatic event in the middle of 2020.
Who are you people?
Where Nissan had hired a legal team and had obtained an unusual court order from the district court in Yokohama
to basically do a search of his home and seizure of his corporate laptop and phone and other documents.
If you don't let us in now, we have to break this key.
So it's a pretty extreme way to treat someone who'd spent 16 years at the company.
These people have all come in. We don't really know who they are, apart from the fact that I've been shown a badge that says the Yokohama Court. And they're here to recover a laptop and a mobile phone. It was even more weird because I'd highlighted to the directors that certain Nissan executives were trying to recover this laptop and this phone whilst I was still in Japan. And I was very concerned because it had evidence on there that related to misconduct matters and other forms of inappropriate conduct. It was just another form of intimidation, another form of harassment, forcing me almost to leave the company and the country. Because once they'd retained and obtained these items, we were still followed, which, again, I just couldn't understand. What is the point of doing that? You know, this is a car company. This is not the KGB.
I think it's fair to say that Rav Pasi didn't have full battlefield awareness of all the intrigue going on at Nissan. I mean, Hari Nada is interesting because he's both charismatic and charming, and one of the most brutal corporate infighters one could ever run across.
This is a confidential company email, right? You should not have this.
If he had fallen into line, he would probably still have his job at Nissan, be paid very well, and continued his work.
A career that he spent 16 years building at Nissan is irretrievably broken. It's been smashed to smithereens. He and his family paid a huge price, certainly. But in terms of being able to sleep at night, I think, he's come out ahead.
I highlighted issues to the highest levels of the company so that they could be dealt with appropriately by those in charge. There was no response to those, and there was retaliation against me. What's really profound, like absolutely profound, is that none of your colleagues, I mean people who you have known for years, forget it.
Yeah.
You're on your own.
Yeah.
And you got to be ready for that. You've got to be ready for that. If you take it on anyway.
This is the awful truth. There's always someone in the family that's pushing it.
This lady does not deserve to be taken advantage of, especially at your age with your own grandchild.
Yeah.
My grandma is having to sue them.
I'm testifying against them. Nobody's talking. They're one floor below right now. I get afraid to go on the elevator. It's sad that it had to devolve to this.
It's like a soap opera
It's a
to
very
me.
sad thing.
It's a family feud.
A family feud.
Here's a family that, on paper, you would think has the wealth that so many people seek, yet at the end of the day, it seemed to sort of rip everybody apart. My name's Tom Schoenberg. I'm a senior reporter here at Bloomberg News, cover financial enforcement. I was approached by someone close to the Schottenstein family and asked whether or not I would be interested in writing about Beverly Schottenstein and this case that she had against J.P. Morgan. And it was immediately clear that there was a great story here to be told. So I started just, assembling all sorts of documents that the family made available to me. That included a diary that Beverly had begun writing when she started having suspicions about what was actually going on with her money. Beverly obtained her wealth from the Schottenstein kind of retail empire that has at times included Big Lots, Value City, American Eagle Outfitters, DSW Shoes. Beverly's husband died, and at which point they sold off their portion of the company, bringing them an enormous amount of wealth at around 1990. Estimates of her wealth were around $90 million. She, for many years, had that pool of money being managed by outside advisors. Her grandsons in the late 2000s had both graduated and were becoming financial advisors. She gave them a little bit to work with, and over time, her grandson, Evan, became the trustee of her entire estate. Managing sort of family money is not a conflict. In fact, some ways in wealth management, it's kind of how you get your start. It's kind of the seed that you need to sort of get going in the business. But Beverly started having suspicions that something was wrong probably in around 2016.
Well, there were suspicious things, but taken separately without everyone talking about their own experiences, it was hard to really put it together.
She had written a check to her caretaker, Dawn, that bounced. So she went down to her local Chase branch to sort of find out what was going on. She wasn't getting paper statements in the mail, so she asked them to print out a number of her statements having to do with her checking account and her credit card account.
So we went to the bank and asked for the statements. And she got a whole year and going through all of them, page by page by page.
And it was there she saw all sorts of charges that she said she didn't authorize or didn't know about.
I was becoming very, very suspicious. I was starting to look in the money part, and that's what bothered me more when I saw that money was going. And I was not a big spender.
Around the same time, Dawn, she starts noticing Beverly's son, who lived in the condominium below her, came up with Evan with a shredder and started grabbing papers in her office area, including some with J.P. Morgan letterhead, and just started sitting at the kitchen table, just shredding documents over and over.
Yeah, they came in one morning.
They used to do it in the back.
Through the back door, and they brought the shredder inside. And then they went in the drawers in the office and took out all the papers, and they started doing it. I was very suspicious because I know you don't go around and destroying papers.
Beverly said that they had done this many times before.
That's when she said to me, Dawn, I'm going to write my feelings in this black book.
Diary.
And it's a diary, and she started writing. Each day she would write a little at a time.
Around the holidays of 2018, a package had arrived, a FedEx package, and in it were materials about a venture capital fund based out of the Cayman Islands. Dawn and some other family members take a